This analyst says that shares could rally as much as 20% more due to AI tailwinds. So the analyst upgraded Oracle to buy from neutral with a price target of 140. That's up from 120. So as I said, Oracle shares up about 3% today, up about 45% year to date. So it's had an impressive run, actually 47% year to date now. But UBS says GPU supply constraints could be enough to drive outsized performance in shares. The analyst is increasingly confident that Oracle has carved out an underappreciated edge in terms of its GPU capacity as well as its cloud architecture. Thinks that will be enough to attract new customers and drive cloud usage. UBS said its independent checks verifies that Oracle is benefiting from outsized allocation of NVIDIA's GPUs relative to its size. I will say I was just comparing this to the rest of the street, and this analyst definitely more in the bullish camp than the majority of analysts. It has 14 buys, 19 holds, and 0 sells. So pretty split between neutral and bullish, but more in the cautious camp than anything. The median price target is 132, so this is also higher than that, and Oracle trading around 119.50 right now.
Okay. Not exactly creating a market-wide liftoff, kind of out in its own world today as the cloud companies continue to be fairly stagnant ahead of their earnings that are really going to get busy the next couple days. Cloud stocks slightly lower, but a good look for Oracle for sure, hanging out up here ahead of their own report, which is early next month after the big June pop from their earnings. A couple other winners. I'm interested to see Verizon and AT&T at the top of the winners list this morning, Caroline. Been a while since anyone's had anything positive to say about these companies.
Yes, it's been a very different story this year for Verizon and AT&T than companies like Oracle. We talked about Oracle's huge run higher this year. While Verizon's down about, call it maybe 13% year to date, AT&T down about 21% year to date. But Citi says now is the time to buy both companies, upgrading both to buy. The Citi analyst points out that a variety of concerns have really weighed on shares in terms of sentiment and valuation, including competition, industry structure, led higher rates. But this analyst now sees a more constructive investment case for large cap telecom companies. Says the wireless competitive environment is showing positive signs of stabilization that should help operating performance. Also, better forward free cash flow should help reduce net debt leverage and support dividend payouts that are trading at elevated yields. So in turn, upgraded AT&T to buy from neutral with an unchanged price target of $17. That's about 17% upside from current levels. And upgraded Verizon to buy from neutral with a price target of $40. Up from its previous price target of $39. That's about 18% upside. So not necessarily more bullish on the price targets, but given the pullbacks, saying now is the time to buy. That said, T-Mobile is this analyst's top pick in the space. He has a buy rating there and a $176 price target, which is about 30% upside, not including, well, I was going to say not including today's gains, but T-Mobile relatively flat on the day in the early going. Verizon up about 2% right now, AT&T up a little bit more than that. And I will say, and when I was looking at the breakdown of Verizon, AT&T, T-Mobile, overwhelmingly the biggest winner in terms of Wall Street analysts on the street. About 80%, 90% of analysts have a buy rating on T-Mobile, whereas 70% have a hold rating on Verizon, 60% have a hold rating on AT&T. So much more cautious on those two, but T-Mobile the winner. But this analyst at Citi says now is the time to buy AT&T and Verizon.
Okay. So even though they like T-Mobile the most, shares there a little changed because everybody already likes T-Mobile, I guess is kind of the way to think about it. But that stock too has struggled a little bit here, softening up after its big leadership post-merger. So thanks for the rundown here, the analyst note. Pretty interesting. A little turn of bullishness from the Citi team, constructive outlook for the wireless companies. Let's bring in Jeff Pierce, Senior Manager of Derivatives Trading at Charles Schwab. And some good news flow here this morning, Jeff. Let's keep going with some of the earnings. Firstly, in the retail group, Pinduoduo PDD now is up 15%. And a pretty nice rally for a company that's got a lot of China connections.
Yeah, absolutely. It's something we haven't seen out of a lot of these companies. As you mentioned, this e-commerce company is not really showing a slowdown in their online activity, even as we see China restrictions fall off. For PDD, we saw earnings per share beat at $1.44 versus $1.01 expected, up 28% year over year. Revenue beat as well at $7.21 billion versus $6.07 billion that was expected, up 54% year over year. Operating profit was up 39% year over year. And the company said that over the recent quarter, they saw a positive shift in consumer sentiment that led to a rise in demand across all their various products as well. And, this is kind of a continuation. We saw Pinduoduo's revenues, or PDD revenues, soar as, they kind of hit the marketplace, started taking on some of the bigger names over there in China, and they seem to not be having some of the headwinds that we've seen from some of the other big names.
Okay. And really moving now. I mean, FXI, China ETF, about 1%. Got Alibaba, JD doing okay here. About time, I guess, as we were just talking about with Jeff. Pretty disappointing trajectory for the Chinese economy has meant generally a very choppy stock experience for anyone invested in big cap China companies. A stock like Alibaba basically unch on the year, kind of hasn't gone anywhere. PDD, though, maybe a little bit of a market share story here too, as it seems like the company has got some unique growth in the sector. Definite highlight here this morning, up 16.5%, not bad. NEO, on the other hand, down 11%. So kind of a blow up for a stock that has been pulling back hard following the big rally earlier this summer. What's going on here, Jeff?
Yeah, very different story coming out from NEO. We saw a widening in their loss. We saw their outlook that came in better than expected, but most of the numbers we saw in this report were a disappointment. Earnings per share missed with a loss of 45 cents versus the 36 cents that was expected. That's down from the 20-cent loss we saw last year. Revenue missed as well, 1.21 billion versus the 1.35 that was expected, down 22% year over year and down 18% from what we saw last quarter. Vehicle sales down 24.9% from a year ago, down over 22% from last quarter. Gross margins contracted to 1%. That's down from 13% a year ago and down from 1.5% last quarter. We also saw vehicle margin decline from 16.7% a year ago to 6.2%. Deliveries, as we know, came in at down 6.1% at 23,520 vehicles. That's down from the over 31,000 we saw last quarter. On the outlook side, this was actually maybe the most upbeat part of the report. Revenue for Q3, they expect between 2.61 and 2.69 billion. That would be an over 45 to 50% year-over-year growth. Deliveries are expected to become between 55 and 57,000. That's up from the 31,607 we saw a year ago. And the company said that they still expect solid growth in vehicle deliveries in the second half of 2023.
Well, that would be a big shift from what we just got. So, market, I don't think, is believing it right now. When you've got sales down as much as they are, deliveries down on the annual basis, just not a good situation for NEO, frankly. XPeng's also down. BYD is okay. Tesla's okay. But it does kind of look like the market is reading a little bit into XPeng as well, which is down about 2.5%. But still, it's a big sell-off for NEO, and the leadership kind of asking a lot from the market to extend it some disbelief in that it will be able to turn things around pretty quickly here. I mean, what in the backdrop of the Chinese economic conversation suggests that there's going to be a more favorable tailwind for NEO versus the headwinds that they're facing right now? I'm having trouble figuring that out.
Yeah, I agree completely. I think if we look specifically at the NEO story, July was certainly an impressive quarter for them, coming in at over 20,000 vehicles. That's breaking a record for them. That came in at 20,462. And that ES6 model, that newer model vehicle, made up about half of those sales. But we're looking at a company, that's really been slowing down after building that factory, after trying to expand further into Europe, this rebound post-COVID and some of the supply chain issues, headwinds that they've had. They just really haven't been able to get over that. And, whether we're talking about this company or PDD or any company that has exposure to China, the question of this China rebound, I think, is just a big one out there, where we're not seeing it in the way that people expected, and we're continuing to see that drag on in these earnings reports.
The vehicle margin, less than half of what it was a year ago. So they just really got killed in the last 6 months. This surprisingly weak backdrop has not helped. And I guess price cuts can only get you so far as well. So, you know, they did make some cuts alongside all the other vehicle makers, basically,
morning.
but not enough to stoke sales.
What's that,
so I
man?
wonder if we'll.
I want it clean, prepared in the pool room. Good morning. SPY making a new high there, breaking the pre-market. It is August 29th. We're going to be streaming stocks, options, futures, trading today. Sub up, like up, comment down. Happy money's around. The market is open. It's been open for about 12 minutes. You can follow us on Twitter at HappyMoneyYT. I'll be watching SPY, GME, GNS, Barbecue, AMC, even some all-in, whatever. Here is our Twitter at HappyMoneyYT. Word server link for both those are in the description. I'll throw call soon. Good. Good evening, good morning so far. Tuesday, August 29th. Stop out of GNS. That's all right. Poison. Well done, sir. Morning, Christopher. 24K on it. Wow, you were in heavy. I don't know what percentage of your net worth that is, but I think that was probably too heavy for this play. I've got eBet up 22%. Up here, kind of just really testing the top of this channel here, so might be looking for some early puts if the rejection. Or not. Start to flip that top of that channel into support. That will change the macro quite a bit. If this starts to become support, then we might be in for a higher handle. Or maybe not even a handle. Which would lead me to want to close my SPY puts for now. SPY's just mooning. Moon mission. Aha, building a bit of a cup here. those. I don't know where those are from. At the high of that cup, though. Alright, well, might look for a little pullback. Because it looks like it wants to reach the top of that cup. Which... that's going to bring us out of the channel. Let's see, barbecue's flat. GME's up 2.85. Well, alright then. Testing that resistance, 18 bucks. Well, I mean, you've got a big boost in the SPY. Gonna see it on GME probably. GNS back to 2 bucks. Consolidation perhaps. See. There's an RSI divergence there on. Yeah, that's not a very bullish. This higher high and this lower high on the RSI. You can see it on the daily. Well, that's not the bullishness you want to see. I was gonna say it might even be a good short, but X dividend, I'm not gonna mess with any shorts on it until after. Wanting to rip some more here. Dang. Yeah, you do. Poison, don't trade with it. Got a nice winner. Put it in a separate account. Don't trade with it. Let it sit there for a month without touching it. And then DM down before. Did break out of that. Yeah, it does look pretty good. Volatile though, not very clean price action. But yeah, has this wedge here, it's broken out to the upside. Came down, came below it, but popped back up above it. Now you've got a bullish MACD even on the day. You've already spent it. It's hard not to spend it. But that's okay. As long as it's something you're planning on buying it and not going to sell it for at least 5 years, then no big deal. Nice to scale in though. Like, yeah, pay off student loans. All the loans. Great idea. If you can, I would try and get 100 of one of those, either Tesla or Apple. Either sell some Tesla for more Apple or sell some Apple for more Tesla so you can sell covered call. Because you're buying both those at a pretty lofty time in the market also. mean, Apple's at like, oh, I guess Apple's come down some. Come down some. You ever heard of like dollar cost averaging or scaling? That's funny. No, it hasn't really come down. Never mind. Tiny bit. Well, hold it for 5 years. Won't be a problem. Won't matter. GME up 3.3. I asked if they thought it was going to be over 20 by earnings. I said no. I don't think so, but pretty green. Well, SPY is holding up better than I thought also. We made this handle, we had this huge engulfing candle that, and now we've retraced almost all the way back to the top of that engulfing candle. Crazy. Yeah, it's going up again. Not taking the calls there, but if I were, I would. If I were, I would. Not prepared. I think it looks like it wants to go for that 445.22. Top of that. Why don't I know this dollar cost average? Street does she live on? Morning guts. Yeah, I'd like. You could at least get to 100 shares. So you can sell calls on it. You can have some income from it at least, and hedge when it comes down. Or buy puts, but hedging with collateral that you already own is so much nicer. I got a few puts there. Might be in and out of them pretty quick. VWAP's pretty high. BWAP. Selling one. Changing my stop on the other ones to break even. This is the way. And I'm out. So the first one I made the profit with, and the other ones are just broke even. So that works for me. 3.5% on GME. Big Lots up 25%. Barbecue down 2.3. MC isn't red 12%. Range. AMC is actually green, ladies and gentlemen. Okay, might be getting calls. See, a nice bounce on VWAP. GNS down 15. Me up 3.5. Now what's Rad doing? Rad's down 6. Oh, Dish had a little spike this. Like its coffee. Mullen's up 2. Was it VFS? Is that it? Yeah. Infast down 50. Oh, look at that. Look at that freaking candle. Oh, yeah. Data came out. Shoot. Got calls in that spike. Ah! I forgot data was coming out. Alright, I'm closing some. Oh, no. Closed one. Okay. Let these at break even. Should be good on it though. Good data. Good data. Actually, they're profitable so fast. Like 16 seconds from buying to selling. First trade was not a profitable one. So now I'm looking for the top of this cup. 445.22. Maybe there right now. Selling another one. BEA beautiful. Do it. Didn't sell that first one so quick. Sometimes when data comes out, it just rips and then dumps and well, eBet's ripping 43%. stop loss on this last one. Break even. Not giving back any. Ever. $45.22. I'll sell this last one then, but oh, we're fully breaking out of this channel if we hit the top of this up. Wow. I wonder if I should sell my puts. Just reload once we make a double top or something. Bottom. Oh, 50% is higher. Yeah, we didn't fully do the 50. Oh, we're going there. We're doing it. 446.37 is 50% retrace from the highs. All right. I'm gonna leave this contract, and then if we get a handle, get some more. Yeah, we haven't fully done the 50. Not necessary, but market's still bullish. There's still room. Just bumping up against the 50-day also here. 57% on eBet. GNS bounce off of yesterday's lows. Or no, not yesterday's. Yesterday. Looking for 445.22. Wonder if I should buy a put there on my call. Always reload. I'll just sell the call. I don't know. Things we don't have to make a handle. Remember, says Nvidia's gonna run. Uh-oh. Oh yeah, it's calls. Selling calls on Tesla and Apple are amazing. Tons of liquidity. I mean, Tesla, you're gonna have a little more premium than Apple, which would be volatile. But yeah, since they're higher price, you can make money just selling calls on them. Schultz Jobs. I forgot there's data right at 10. I was waiting for I was waiting for this to break, and then it like started to, and then as I was clicking, it just made that fatty candle. I'm like, oh my gosh. I was able to get in before a lot of that candle was built though. Morning, Tasty. There's that resistance. Will it be resistant? Thinking we can 4% up on SPY. Yeah, we've fully broken out of the channel. Distance on that was this morning pace. I think we can make that 50% race. still sell. I have one left. Leave it. Almost 4% on GME. AMC's green. Oh, no. AMC's green. 2%. What's barbecue doing? Down 2%. It's good though, as long as it's flat and not like right at the level. What else is moving today? Evital. 44% on eBet. Still ripping a little bit. Still climbing. This is right at that cup. So alright, I'm closing that last ball for now. Cool. Now, patience. I went with fewer contracts this morning just because it's the morning. It's more volatile and as I'm more prepared for a bigger setup. Get a big reversal or a big change middle of the day, then I can go with. Could even take the puts here, but it's either a cup or it's a double top thing. A lot of action on SPY this morning. GNS down almost 20. I did, I took bets there. Either it could still bust through, but it's showing resistance at that high, so either double top or cup. Get a handle. Wow, that's a big move. Rid of the body. $441, that puts it like low of the day. Puts it low up yesterday. Trace. Wow. Maybe a great put. GME new high there, up 4.6. Little pre-earnings rally on it. Acting up some more. Wow, new high of the day there on SPY. Got all the pullback it needs. Frothy. I can't imagine it's not gonna at least settle down for a bit at this resistance. Probably pull back some for more strength at the very least. SPY ripping there. What was the jobs data? Gold broke out? Oh. A run bounce there, runs up 4%. Hey Julian, you hope GNS is still fine? Don't hope. Hoping we'll lose you money. There's an RSI divergence on here. On the daily, on the 4 hour. It's still going. Wow. Wow, could have held the calls. That was such a tiny pullback for a handle. 4.25 on GME. 1832. Barbecues at 20, down 2.3. ABNT down 3. Yeah, I might be closing my my January SPY puts today, depending on how this plays out. I don't know. Hold them and average down. Not a whole lot of time. I mean, SPY could make a full-on double top too. The thing, if it's gonna make a double top, that's gonna take all the time up until January. We're gonna get a rally, whatever chop, and then potentially a Santa rally into winter. That could, you know, give us a double top. Wow, SPY is still frothing. Surprised there's not more resistance at this high. That'll probably end up being support then. Pop on coin. Yeah, 10%. Bitcoin rally. They had news. Runs up 5%. Okay, if you FOMO, just know how to get out. You gotta get out quick once you realize you made a mistake. Holding and hoping will lose you money. Need to hold and average down. Rotated calls the next entry. Talking about on SPY bets. Yeah, these SPY puts, I'm only down like 10% on them. Or no, never mind. Because I was averaging in like different days. Between 5% and like 25%. But if we're going to be not having a handle, then we could just melt back up to all-time highs. Especially with an election year, the Santa rally. Looks a certain way. Hold them average down to consider some ridiculous calls. Oh, set up a strangle? I'd maybe just get calls instead of selling them just as a hedge. Yeah, coin's up 10. Still ripping, wow. Must be news on this. What's the news? Insiders are selling? Most large cryptocurrencies decrease on Uniswap. Cardano drops. I don't know what the news is. Upstart's up 7. Got some froth in the market. Apron's up pretty big. That Upstart bounce. Charge points up 3. Nice. MC is actually flat. Barbecue 2020. Good rip any day. Any day I think we can start moving up on barbecue. % on Coinbase now. I'm gonna keep going. This is crazy. Well, it's getting up to that 50% right now, actually. It's right here. It's 446.37. So it might be just stretching for the top of that handle. Morning. Wow, coin's ripping. 12. Yeah, you've got all the crypto ones up. Something with crypto. I think it's just stretching for the last bit of that handle. Runs up 5.5. MC is actually green 1%, 1.5. Unless it'll pop off the top. SPY, see, do it. Doing it. Pretty big pop there on SPY. That's it. That's 50%. I mean, it could be a range. It doesn't have to be exactly there. My drawings might not be perfect, but we'll see. This might be the top of the handle. Crazy. It went from like, oh, we haven't made the whole handle yet, to, oh, there's the handle, to now we're edit. Like that. Wow, SPY is ripping. 0.83% up. Tried to call the reversal way too soon. I'm gonna force my will on the market. Again, it has to make a handle when it doesn't. It has to double top when it doesn't. IEP is up 1.8. Dude, laser? Oh. Thing has a $2.3 billion market cap. Only 16 million a quarter in revenue. There's 143 million of that 16 million. Ripping. That's it. Could be the top of the handle. The numbers on Thursday. We just busted through that resistance like nothing. That meant nothing. I'm still going. Coinbase up almost 13. Okay, have an order. The Theta Farm members. opened up the position. A bit of a ways for VWAP now. This is definitely within the margin of error for 50% retrace, I'd say. Very curious if that's the high. Not averaging to anything yet. Want to see if it finds support. If it finds support, then it might be bullish. It might be double topping on the year. Ugh. Pretty good size red candle there.
Bounced back into this sort of range that still is a downtrend. So what's going on?
It's definitely not like a clean chart here. You can see
Basically,
though that
one's
we've
lost
got
against
this
EC.
downward
That's
sloping
the
trend line.
that's
Doesn't
the
match up exactly
crypto
with the
news.
highs here, but it still illustrates that we've been in a series of lower highs and lower lows
Highs
here.
flying.
You're right too. We did have this little gap
Past
downward here.
446.
We broke downward
Already
a little
past
bit,
446.
and we found some support at the 139 level, which is about where we
Exactly
had
50%
some old
retracement,
lows
though, from
all the
the
way back here.
highs of the
Another
year.
example of why it can be worth keeping track
Oh,
of
inverse
these
cup
lows and
candle.
highs, even if it seems like they're kind of far away at this
completed.
point. Now, I'll be honest with you, Oliver. My notes for this one are ruined because we've
It is
had
a
such a
handle after all.
turnaround in this name today. We faded significantly from the open. It was looking pretty promising because we broke above our old resistance here near 143 based on these old lows and our gap right here. We broke above this downward sloping trend line. We broke above our 21-day exponential moving average in yellow. But we hit a wall right about here at our 252-day EMA, our longest term EMA that we follow. Rejected from that point here, slipping back below some of these technical levels that I've mentioned. We also were above the 50 midline this morning, but we faded back below it here, so momentum not out of the woods yet.
Sort of, yeah.
Well,
if you count the wicks, it's engulfing.
At least
I usually don't.
you know,
I just
off
count the
this
body.
low kind of support. So some hope
I'll be
here,
adding
but
to my
generally
puts,
a pretty weak chart, longer term.
Potentially.
I guess kids aren't eating PB&Js for lunch anymore. The heck, that was my staple.
Still pop on
My
barbecue.
kids
It's now
like peanut
green.
butter and Nutella, so I guess we're contributing to that.
All right, there you go. You don't know jelly, but you got the PB in there. All right, let's look ahead here. We got PVH coming out after the bell and after some of the big brick and mortar retail blow-ups. Macy's,
GNS kind
Kohl's
of rallying
didn't
back
do
up a little
great.
bit.
I mean, PVH
Yesterday's
is
lows,
selling a lot of
if
that
that
stuff
becomes
into
resistance.
those stores.
It is, and so the main brands from PVH are Calvin Klein, Tommy Hilfiger. Those have been propping up the company consistently, right? And they expect that to continue, but they're looking for growth year over year, expecting top line growth. We're looking for revenue of $2.19 billion, but the company is expected to see earnings decline by about 16%.
Yeah, I'm
We're
adding a
looking
couple
for
puts there.
$1.75 a share. Now, although PVH has been gaining momentum from those
Could
two
see.
core brands, and they expect
Could see
continued
reversal, or at
strength
least a
from the two
maybe
brands,
little bigger
it's still got
pullback before we
inflationary
keep ripping.
pressures that it's been fighting with. They remain near-term headwinds for the company. So they have higher raw material costs. They have more currency headwinds coming as well, and this is all going to take a toll on margins. So share price action year to date, this stock is up more than 11%, but almost 25% over the past 12 months.
Yeah, it's not the worst looking chart for retail out there.
See, it's green.
Kind
Look
of
at that.
stuck, but at an elevated level. Last earnings were okay. They beat one before that, decent as well. They've had a couple here that have managed to beat expectations.
Up sizably off those yearly lows. We're up about 82% from that point. But as you said, Oliver, kind of drifting sideways in a triangular type pattern here. You can see these two blue dashed lines converging toward each other. Short term, more of a downward sloping channel here. These two white dashed lines that have taken us below our 3 moving averages, below our volume profile point of control as well. And we're trading near the lower end of this range now. So definitely not what you'd want to see. Our 2 shorter term moving averages, 21 and 63 in yellow and orange respectively, they're trending downward now as well. They're sloping downward. Our long-term EMA is sloping sideways, so more of a bias toward the downside. One good thing, I guess you could say, is that we did not make our way into that oversold area yet, but a break below our trend line and a break below the oversold area could be a warning sign for the bulls here. It could be a sign of further weakness to come. In terms of support, 75.50, this green
building all
dashed
head and
line,
shoulders on the
about
top
where we
here
had
with
some
the
highs
5-minute.
before that gap up, and some lows right there. So that could be a point to watch. And then our moving averages would be the short-term resistance to keep an eye on.
Okay, so pretty well supported stock you're going into earnings out of this downtrend, though. So that's kind of a good setup, I would think, if you're hopeful that they're going to beat expectations or say something positive, that the stock drifted back down to a level that has been supportive in the past, looking for a little trend reversal on these earnings this afternoon if they beat the expectations. But to Renita's point here, there are definitely some headwinds still in that apparel business. Thanks, Rick and Renita. When we come back, get an update on some more retail. Big Lots having a good day after its earnings. All right, not bad. Nice little rally here for Big, up 27%. That'll do.
That'll do. What a eventful morning so far. 1 hour into it, guys. Thanks for your support. Hope you had a good morning up to this point. Had Jolt shop date at 10. That kind of started the rip rally. You've given me 11 thumbs up on the stream so far. I appreciate it. We have made our 50% retrace on the more macro. That was above this little up that was being formed, but the bulls didn't need it. They were like, hey, we're just going to keep on going and get that 50%, and then we'll come down. So if that's what's happening. Case. Got enough puts, I guess, but I hope it is. Too early on the first entry for puts. Oh, I said I need to wait and be patient. It wasn't. But that being said, this is all still very quick. This is already their top in the reversal. It's nice quick price action on Les Spy. So is AMC not going to get back up to 25 bucks? Because that'd be neat. for how to roll. And roly poly. Yeah, I'm closing a couple of these puts. Close like, I don't know, 10% of it. Real small amount. Close another one. Bought some 442s. Alright, Bubba, that's pretty far out of the money. Coinbase almost 15%. Ron is up 6. Neat. Some of these are actually getting finally some relief rally. Adds up 2.5. Dish. No rally for you, Dish. Glad I closed what I did. Well, look, See if there's another spot to reload. Or need to close out the rest and jump into calls. On the macro, I'm liking if we're rejecting. That's a top. That's top for the handle to be finished. Got top up 8. Down today. Been fast down 20. Down 18. Ah, Jones earnings. We suck again. Hoping they're just having a crazy earnings for some reason. Neo's down 7. Do they have earnings? Yeah. Revenue outlook 2.61 billion. 2.69 versus 2.44 estimates. They beat on revenue? That's ePads. Missed 45 cents. I think it's EPS. Estimates were 36. Negative 36. I think EPS was negative 45. Sales missed 990 million. Estimates were 1.35 billion. Wow, a couple big misses in there. But bouncing back out of that gap down from earnings. Oh, liquor's down 4%. 4% now. Here. We work. We down 4. Hawaiian down 4. Barbecue sauce 0.6% up. Any day now, barbecue. Under the put there. Wait. Day now, Barbie. Ah, wait. 4.7 on GME. I don't think there's any barbecue news. Not showing the right price. Mine seemed kind of expensive. I don't know if it's right or not. It seemed kind of spin. But had a lot of price action this morning, so I guess that makes sense. Adding there. I don't like my where I added. Well, KBNT down 3. slowly load down. Yeah, my long-term swings. Way too much now that I have so much bearish spy plays. Need to remember that when it's up. Not be greedy and scale out. I think in October. By October, I'll probably start scaling out. On the price, of course, but open for a new low there. But if today's kind of a decider, really. I guess PCE is going to be a big mover too. Bullish jobs data just brought us up to the top of the handle. So if we come down and find support and break that handle, then especially if we find support on it, yeah, probably should close them. Find another entry. We're down the road next year after the election. We might be still in a bullish trend here. Could not be the reversal. Lighter? Yeah, I'm closing out some of these puts. Kind of missed the good exit there. Could be. I'll get back in with more confirmation. It'll be breaking VWAP for what I'm looking at. got kind of a little double bottom here. Awesome. One. Barbecue up 2%. Picking up.
Medicare Part D, which does cover these prescription drugs, these are the most costly, and I mean account for nearly 20% or around 50 billion of the prescription drug costs that were listed last year from June 1st through the end of May. So the negotiations will be ongoing. This will go on now for about a year. They will expect it to end in August of 2024. The agreed upon prices of those drugs, though, will be scheduled to go into effect not until 2026. This will be more of a long-term story. But we are seeing, at least today, Novartis, Amgen, AbbVie is lower, but some collective strength. But again, this will be more of a wait-and-see story as these price negotiations will now go on for the next year.
Right, understood. Okay, and then Google, GM partnering up on AI. Some big news there.
Some big news as far as at least
Coin up
Alphabet
almost
strengthening,
17.
I think, its AI position goes,
Holy
as well as
guacamole.
GM. But GM not really seeing the same degree of strength as Alphabet is seeing, at least on a year-to-date basis, of course. But GM and Alphabet did say they've struck a deal now to bring this conversational AI to GM vehicles. GM did say its OnStar interactive virtual assistant will be powered by Google Cloud's conversational AI technology, and it has been really since its 2022 launch. The assistant can give members responses to basic questions as well as routing assistance. And they said, per their statement, it has the potential to revolutionize the buying, ownership, and interaction experience inside the vehicle and beyond. GM and the Google Cloud, which is of course naturally owned by Alphabet, have been working together to integrate this technology into GM's vehicles for the better part of the last 4 years. But we did also get some really interesting news even outside of this, actually, that U.S. Senate Majority Leader Chuck Schumer will be meeting with some of these very influential CEOs in the world of AI. I mean, CEOs of Meta Platforms, Microsoft, Alphabet, Tesla, as well as actually the CEO of OpenAI at an AI forum on September 13th. This is per Schumer's office. So he had previously said he would host the forum to lay down this new foundation for AI policy, but that will be another event to keep on our radar, as I'm sure some of the comments regarding that September 13th forum will be very interesting and is right now being definitely very watched by the market.
Yeah, without a doubt. Got to learn more. Jenny Horn, thank you so much. Markets correspondent, appreciate it. Let's get some news that's shaping the markets. We welcome in here Bob Elliott, CEO and CIO, Unlimited. I'm glad you're here. And before I get to all the economic data, you say prepare for a recession. Why is that?
Yes.
Well, I think we've gone from a point where about a year ago everyone was calling for immediate recession, and the economy has been a lot more resilient than most people expected, to a point here now, almost a year later, where the storm clouds are gathering as the tightening effects are starting to work their way through the economy at a time when basically everyone is all in on the soft landing or no landing scenario. And that divergence, I think, is going to be quite an acute lesson for the markets over the course of the next 3 to 6 months.
What would be the storm clouds to which you're referring?
Well, I think what we're seeing, the tightening cycle hasn't been as fast as many expected, but it's there. Credit has slowed. We're seeing softening in various areas of the labor markets. Not a total deterioration, but we've seen some meaningful softening there. And then those rising mortgage rates are creating another turnover in the housing market, construction. Those sort of cyclical sectors of the economy are starting to weaken a bit after having been a little more positive in the first half of the year.
So if the recession actually comes, I'd like to know when you think that may happen. Could it be that it would be short-lived? Not that deep, not that long, because if it's actually created by the Fed's raising rates and that trajectory at which they did that, I mean, some would argue that it was actually very fast. you had so many 75 basis point hikes. Could it be short-lived and not that deep?
Well, I think
There's
one of the
nothing more
questions
foolish
is
than
you
cat
think
litter in
about
video games.
how much the Fed has had to do in order to get us to slow down the economy enough, right, to start to loosen the markets.
Yep.
The flip side of that is how hard will it be for them to stimulate
over
the
here,
economy
CNBC?
when we start to get that self-reinforcing downward,
that's kinda loud.
downward cycle going on. And my guess is what we'll see is something that's actually longer and deeper than most people
seeing an RC
expect.
tweet.
And what are you watching when it comes to GDP? I know you were looking at the evolution of the Atlanta Fed, and you had a chart for us. What was that one telling you?
Well, the Atlanta Fed GDP Now measure is trying to get a timely sense of what growth is going to look like over the course of the quarter, over the course of the third quarter. It recently printed 6%. That is implausibly high. There's no way growth is at 6%. There was a good July set of numbers, but when you look at some timely numbers that are coming through in August, for instance, consumer demand as measured by the JP Morgan credit card data, which is a very good measure of consumer demand, you're seeing that start to weaken meaningfully. And as a result, what we're going to see is the second half of the quarter is likely to be a lot weaker than the first half of the quarter.
And you also noted the foreign situation, less demand, less growth. China story, not seeing the gain there and the growth there that some had anticipated, right? And that's contributing to this?
That's right. I mean, if you look at Europe, they're clearly moving swiftly into a recessionary environment. The UK is slowing down meaningfully. And then China, the steps that are being taken so far, are pretty minimal.
Last tweet I'm seeing is from August 2nd.
It looks like they don't really know what they need to do in order to create a reacceleration of the economy, or they're just making a choice not to reaccelerate the economy, because what they've done so far is pretty marginal and not going to get it done.
So what are your expectations this week? We have GDP coming up. We have a big job. Well, we have JOLTS, ADP, and jobs on Friday. What are some of your guesses on what we could see this week?
Well, I think we're going to see a set of data related to the job market, which is the slowest part of the economy. That's going to still look fine. Most of the timely data is pretty indicative of the fact that the job market is fine. A little odd the response and the magnitude of the response to today's JOLTS jobs openings, which a 15 basis point move in twos is a pretty significant shift, a pretty probably an extreme shift relative to the incremental information we got related to JOLTS. Probably more of the same on employment. The key area to look at is, are we continuing to see in the labor market those wages be elevated, right? Those average hourly earnings, are they still going to be up in the 4 to 5% range, or 0.4% monthly? Are we going to continue to see those inflationary pressures in the various measures in the GDP report, the PCE deflator? Are we seeing those inflationary pressures? Because what that means is that even if the economy starts to weaken, the Fed really can't shift to easing. And I think that's the combination that's the worst combination for asset markets.
Not one for deleting
inflation
tweets.
is still a little too sticky, wages are a little too sticky, even as the economy is decelerating.
So what's your advice to investors now? I mean, you have fewer job openings, and sometimes people would say, oh, why are there, why is it less than 9 million now? And it's not because, every job is filled. It's because a lot of these, it could be both. Some of the jobs are filled, but also maybe they're not putting out as many openings because of concern about a slowing economy. So, at this point, what's your advice to investors?
Well, I think we see a pretty tough environment for investors over the course of the next 3 to 6 months, particularly 60-40 investors. You see earnings growth priced in at 12% for 2024. That's going to be pretty tough in an environment of a slowing economic conditions. At the same time, you also see meaningful interest rate cuts at a time when those inflationary pressures continue to exist in the economy. And so the odds that the Fed delivers the immediate easing that many investors are expecting is unlikely. And I think Chairman Powell's Jackson Hole speech really pointed to that. More work to be done, possibly indicating higher rates, not lower rates first.
So you got to plan on that when you're putting your money to work or keeping it on the sidelines. Okay, Bob Elliott, thank you so much. Thanks for being here. Good to see you.
Thanks for having me.
CEO and CIO Unlimited. Coming up next is the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals. Kenny Pulcari.
Lichtenstein. Yeah, I guess it's a little harder for me to talk over the news if you want the news to be audible. Yeah, I don't think you tweeted that. General situation? Seems like a good long-term hold. GNS down almost 20. GME's up 4.8. Barbecue doing 1% on barbecue. Market started chopping around. It is 11:15, so eh. Oh. End of week. The market keeps up its frothiness maybe, but it's hit just at 50% on the retrace from the high below. So very well could be the top inverse cup and handle. Today should be a decider though. We should have some confirmation. Given there's PCE data on Thursday, that will be a catalyst for a direction somewhere. AMC is falling because they had a reverse split and massive dilution. And GME is holding up with the SPY. AMC and GME they're not really tethered unless there's a ton of volatility on one of them. So I think when AMC started falling before the reverse split, I think they did kind of tether with GME. We had these 3 big red days on GME. But now that the volatility's settled down, free to move with the SPY. Gonna move on its own. That's where we're seeing this bounce. But the SPY's also been bouncing too. NNOX. Knox. 1 green candle. Fool them all. All in for reversal? Maybe. Maybe gal. Get some. Still a gap below there on Knox, down to 629. But it did break that trend, as you can see. So good first start. Flattening out at least. A gap? There's no gaps on SPY. 448. Oh, to the downside? Right, upside? No, I don't. Oh yeah, there is. Never mind. 456. There's a gap. That's true. That is something to think about. Well, if we break through this 50% today, or anytime, then yeah, that gap will probably be getting filled, and could be testing the highs again. Cup maybe forming here on Le SPY. I might need to get out of my SPY puts. They were kind of a hedge anyways, so kept the count more even. $500 Bidenomics. Yeah, pump into election wouldn't be that abnormal. on GME, you've got earnings, so unless you're trying to play it for earnings, you don't buy it before earnings comes out. You get a huge gap down. Also gap up, so I don't. Oh yeah, if SPY is turning around here, that could have been the low potentially on GME. We'll see though. I'm not calling anything until we have earnings. Closing out on one of these calls. Recently we've just had big gaps on it for earnings. So, you look at the last two, big gap up, big gap down. GNS is potentially consolidating, but there's ex-dividend date. Ex-divvy is on Thursday. So I'm not sure if it's going to cause it to rip or drop, or could be a catalyst for something though. MC, I don't know your Twitter, and I'm not seeing anything on Reddit. And knowing Superstonk, he tweeted something. If he even thought about tweeting something, they're sharing it on Superstonk. You either saw it on a fake account on Twitter, or you saw someone that shared it that made it up. There are two possibilities. Or it's real, but I haven't. I would need to see it on Superstock and other people sharing it. I'm selling a little more. Okay.
I see a neutral there. I see a buy rating from Stifel. Ben, your turn. Comstock Resources.
You know, this is another one that I appreciate the optimism, and at some point these names are going to turn around, possibly the move that we're seeing in AI, the start of something bigger there. But in terms of CRK, I don't really see anything at this point that invalidates the working assumption that we are and have been and continue to be trending lower at this point. Taking a look here at
looks like we made a little cup though.
15-minute candles in this
might be
instance, just going back the last couple weeks of price activity. And what I notice is every 60 cents we have these areas of consolidation.
Post some of them, didn't post all of them though.
Regains composure, transitions into this horizontal phase, is a lot more overlapping and rotational relative to the conviction associated with the separation between each one of these two. And again, in this instance, as you can see, currently balancing around 1180. Now, if we were to get up above 1240, you can see on the left side of your screen, it's the, last area consolidation that we formed prior to the one that we've been in over the last couple weeks. I think that would be definitely something to get excited about. It would invalidate the working assumption that on this, again, more granular time frame, we're actually trending lower, but that still seems to be valid at this point as long as we remain below 1240. Taking a look here, that's also apparent on this longer term chart here, the longer term time frame. This goes all the way back to this time last year. We're talking August of last year, and we were balancing around 19 in the fall of last year, beginning of November. We broke down and then went rotational around 15. Pretty good example, again, of these two phases of development and how we're currently trending lower.
Oh, Teddy
where
Publishing.
areas of value continue to establish at lower and
Oh,
lower
not
levels.
RC.
And currently, right now, value is being established around 11. So again, in this time frame, it looks like the bulls would need to get up above 15 before you could get really excited here. But you can see a pretty well-defined trend here in both instances, a more granular time frame, and then again, as we look at the daily candles here going back to the last year, similar pattern.
Even
Areas
associated
of
with
value
Ryan
moving
Cohen.
at lower and lower levels with limited retracement to the upside.
I think that, thank you for that. So, and I think a lot of these names get tied into oil itself and, where
That's Ryan
oil is
Cohen.
headed. Sometimes it could be a rate play, a dollar play, and some of these names could move along with that. You saw Ben's charts there, Kenny. Final thoughts there.
So listen, if I liked it at 19, I have to love it at 11, right?
Yeah, exactly. That's what they say.
And I love his charts. They're perfect. But I got to tell you, I'm bullish on energy the rest
high
of
on
the
the day.
year. I think this one's at a level now where it's going to provide, a bust. A burst up. And now look, like I said, it is off 14% year to date. So it's underperforming. And I think if energy turns around in the second half of the year, that this is going to be one of those names that benefits.
Okay, next up,
handle.
ABCX, and we're looking at Aptec.
No handle.
And a smaller name, but had a
Come on,
recent
let's
pop,
see it.
a nice run up.
Some weird price
6 months,
action.
It's up 100%. 1 month, 100%, I should say, because that's the recent pop. Your thoughts on that one?
It is. This is a name that I own. It's
Yeah.
also in the digital. It's a fintech in the digital payment space. But you go back and you search some of the news, you'll see over the last 6 months there've been a lot of partnerships and exciting things taking place at this company. Thus, we've seen
California
the pop
is like
from the low
Red Hot Chili Pepper
150
song.
up to as high as 5 just a couple of weeks ago. It's pulled back a little bit. They just introduced a new product, which is a competitor Venmo, and actually it's going to be a real competitor Western Union because it's going to allow people to send dollars directly to South America, which they can't do on Venmo right now. You can send it to Brazil, you can send it to Mexico through some bank relationships they have. So I think there's a lot going on there. This is pulled back, traded up to high as 5 just a couple of weeks ago. It's trading back now like 3.5, but I think it's volatile. Certainly it's a smaller name, so you have to be prepared for that. But I think the upside is here, and I think we challenge certainly 5 again. As this news filters through the market.
Yeah, Instacash.
Maybe
it's
a little
called.
double bottom
Right?
down
Instacash
Genius.
is the name of the
I
Instacash
don't
is the name
calls
of the
on SPY here at the
partnership.
high
Stands
today.
peer-to-peer payment system.
Right.
Right? Is that what you're
That's
talking
the
about?
one, though.
And that's the one that's
Well.
going to compete with Venmo, and it's going to allow. It's really going to compete with Western Union because right now, if you want to send money to South America, Western Union is the place to go.
Okay.
Whoa.
There is a lot going on here. I'll
Highs
give
up almost
Kenny that
1%.
one. In terms of price activity, we've seen some big moves. It's kind of a combination of the two conversations we've been having. Going back to the example that we looked at in terms of AI, high conviction to the downside on the left side of your screen, and then much more sideways as of recent. But you can see in this instance, again, we've been sideways around this, around 330 level, but this came after a big move to the downside, which came from around $5. So again, I'm sorry, 330, I said a little bit more like 370, but let's take a look here in terms of the areas of consolidation that I went ahead and identified, and I want to point to, again, the fact that we're looking at a 5-minute candle chart here, right? So you don't want to put too much cred in this one. You want to take a step back, but just looking at the most immediate price activity, overlapping rotational after high conviction on the downside, this is the form of acceptance, again, around this 375 level. Let's step back, though. Let's not get too into the 5-minute candle here. And you can see this is where it gets a little busy, right? You've got a very well-defined trend environment to the upside, which kind of topped out after we spiked around 484, the move we just looked at, coming back down and then sideways, but still holding up above a key area around 330. So there's a possibility that we're just kind of forming this larger area of consolidation around 360-ish, we'll call it, but definitely losing some of that momentum to the upside. That's not what the bulls were looking for in terms of that breakout, the attempt to get something going near that
11:30, we got 5 minutes to EU close.
Value forming at a higher level. So a flag flying there, but I also wanted to point to where we are in terms of the 50 to 200-day moving average, because you can see how that recent spike that we looked at fell short of the highs that we saw back in beginning of the year around 537, well above the 50-day moving average. Some of the momentum we've seen to the upside. The question is, are we starting to roll over here after failing again?
High of the day, though?
Just
Come on.
shy of that $5
Just
level.
melting out of there? It's weird.
Shy of a key area that we established earlier in the year.
No resistance.
Are we starting to roll over again? And that's his question.
So I think if it holds, like Ben said, if it holds at that 330, 350 level, which is right where it is right now, I think yes. Then I think there's the opportunity. And look, if this thing even trades back up to $4.5 or $5, that's still like an 80% move from where it is.
Huge, right. I mean, 1 year is already 500%, and it's way off the highs. So I guess it has a lot of potential. This group,
but it's volatile,
overall,
so understand that.
Yeah, understand that. And it's a smaller name, so it can have a lot of volatility. I think you make a good point with that. Kenny Polcari, good to see you in person.
It is always a pleasure to be at the New York Stock Exchange with you.
Your old home. All right, thank you, Kenny. Until next time, thank you for the big three. And Ben Lichtenstein, thank you as well. Always great on those charts with us. Thank you. All right, coming up next, we're going to spotlight logistics company ArcBest. So celebrating 100 years, the anniversary. CFO joins us next.
ArcBest. Brad's up 2 1/4. % on barbecue. Still consolidating above that 20 cents. Let's see, we do have RSI divergence. That is bearish. This holds here. .3% on barbecue. A little bit of volume there also. GNS back to VWAP. GME hanging out up 4.75. AMC is actually green, 4.5%, 5%. Another like 1,000% to go. So from the drop that started, out of nowhere, actually, but it was in anticipation of the reverse split. AMC has to recover 400%. The drop was 78%. But to recover that, it's 400%. Buy, ripping their new highs. Almost a whole percent. I might be closing my puts on a pullback today. Oh. We have a pullback and show support. Maybe it's too soon. Probably wait. Wait a little bit longer. It's a big green day. Probably chop for a bit until PCE. But it moves so fast. I mean, this thing could be back to all-time highs in just a week. Couple big green days, gaps, big greens. % on barbecue. Rounds at 6.6. Supply's still going. Hold the calls a little longer.
There's going to be a lot of the same elements in terms of what's driven the success to here today. So we've listened to our customers over time, we've innovated, we've been agile, and we've really focused on our employees, and we're going to continue to do that as we move into the future.
Yeah, and you're in the CFO role now. Tell me about the landscape and the labor. I mean, you just talked about the growth for the company, how you're growing. Tell me about some of the growth prospects for the company going forward.
I might start.
Yeah, so really we're well situated to help our customers in all environments.
Triggering
so
stops.
You saw the market disruptions in 2020 and 2021 in the logistics space. We were certainly well positioned to serve our customers there with the assets that we have to move product to where it needs to go. And now as we've moved into 2022 and 2023,
I think it's getting up
there's been
towards
much
those
more of a
levels
focus
because
on
we're past the
efficiency,
50% now.
and we're very well situated to help our customers think through supply chain optimizations
a little
and make sure they're delivering their
1%.
product in the most efficient and effective way possible.
So at this point now, you did mention how, 2020, we had so many supply chain issues, and labor was a big issue. We had a glut and a holdup in the ports, couldn't get the ships in, there weren't enough truckers. Where do we stand now? Because we do have a lot of issues still with labor. I mean, for example, and I know you're well aware of this, the United Autos Worker Union, right, for the automobiles. We just recently went through a deal, UPS and the drivers. You have a lot of the pilots and the airlines. And are you facing some of the same, because there are some bottlenecks, less so, of course, but bottlenecks in the ports. How are you handling this? What is it that
kind
you
of crazy
need to
that
talk
there's
about
not really
with some
been a
of these
pullback. I
drivers
mean, this
or
was the biggest
workers
one. This was
that
nothing
you
for
can
how
come
big
to
of a move
happy
this was.
medium?
That was
so
nothing.
we've had a
And then
great
even on the little
relationship
cup,
with
there
our
was no
employees
handle.
over our 100-year history.
And then even on this bigger
we
one,
actually
there was like
just had a
nothing.
contract as well that was ratified
melted through
overwhelmingly
all
by
of
our
it.
employees over the last month or so.
Doesn't-
it really
doesn't
sets
make
us
it
up
the
well.
easiest
It's a
to
5-year
trade.
contract, so it sets us up well to
Once you get in, you just have to
recruit and
hold
retain the best employees in the industry.
Never take
Like I mentioned,
profits.
we've got a great group of
Never
employees
surrender.
up here in New York that we're excited to celebrate with, and especially, like I said, those 2 America's Road Team captains that we're very proud of to be here with us today.
How long are those contracts for? Because now that gives you gives you some solace, like it's set. And
Yes.
you said they, renewed that, and you're all set with
Yes.
that. How long do
Yes.
those last? What do they promise?
Yes, so we made some very key improvements to quality of life benefits provided under the contract, to wage and other benefit improvements, and that will be a 5-year contract now that runs through 2028.
I see. Well, that's some good news there. So tell me about, what the industry overall. I mean, I know we're shipping medicines and clothes and all kinds of items that we need for everyday life. Where do you see a lot of the demand?
Yeah, so we really see it across the board, and it really shifts over time. And so, we've been helping our customers across a variety of industries. Like I mentioned, there's been a little bit of a slowdown just in the last couple of years as there's been a focus on efficiencies. The manufacturing sector has slowed down a little bit, but it's been able to provide us some capacity to serve customers in other areas, including some of the ones that you mentioned.
Shipments up, tonnage up. 1923 was the year this company was established. I think about 1993, we barely had the internet and Google, and now we're all about AI. How are you incorporating, data statistics, AI? That's got to be helping you now, right?
Yeah, so I would say that technology and investment and innovation is in our DNA as a company. We make investments usually over $100 million a year in that space. Certainly, we're following the developments in the AI space very closely. We've been leveraging technology, including technology like AI in the last year or two as we've been focused on, the routes that we're running across our network. We've got a city route optimization program that is really focused on making sure that we are minimizing our environmental footprint and delivering our goods to our customers in the most efficient and effective way possible.
Yeah, I mean, we're past it.
To you and the team at
Dang, man. All right, I'm probably going to close these.
Another 100 years ahead, at least. Good
I'll close some today, and then
I probably won't be around for that
it's
one.
such a green day to be closing
Thank you
codes.
so much. It's wonderful to see you, Matt.
Great.
I really appreciate it.
Thanks, Nicole.
Take care.
I appreciate it.
Yeah, we're past 50% though.
Disruptors. George Sillis is standing by.
Pretty
He has his eyes on Airbnb. An analyst saying that it's an attractive entry point. What do we need to know next?
Oh, yeah, look at that thing squeezing. Ah, why do you got my calls? Weird price action. Mara, I think it's probably pumping with everything else crypto related. It's definitely still in a downtrend though. With this news, will it continue? I don't know. The stock didn't look good though. Price was not in its favor, the trend. Holy moly, Spironi. 1.14% on SPY. Yeah, so anyways, yeah, I don't think it looks good. Could have some continuation from this news, but could very well be a one-day type of deal on it. But why did I close those calls? Oh yeah, because eye of the day. Just got there and then just slowed down and kept going.
Maybe, you know, coming out of as of late, but in the last 30 days, Airbnb has been down about 15%. But you have to think about this name as really the largest accommodation platform and bookings platform. It's becoming a full-fledged online, you know, travel agency, if you will. It's growing tremendously fast, and of course, it's a very profitable business. Now, if you look at the report on the 3rd of August. They demonstrated 75% earnings growth, beating the earnings estimates, and also revenues grew about 18% year over year. The other thing is that the company actually guided higher for gross bookings growth as well as profit margins, and the stock since the report on the 3rd has actually fallen about, like I said, 15%. So I think Bernstein is actually looking at this as an entry opportunity for those who have maybe overlooked the name. Contingent upon what we actually saw in the markets pulling back, particularly the technology stocks, because Airbnb at the end of the day is really a technology intermediary. They actually generate fees and transaction fees from both the hosts and those who actually book accommodations on the site. In other words, the guests. And overall average fees are somewhere between 14 and 16%, which is quite large.
There's still a divergence
and the
there.
company is very
that shows how
profitable.
weird this
They're
price action
generating
has
about
been
25%
from that breakout.
profit margin on about 85% gross margins. And on a forward
There's
basis,
no strength
I
in
can
this
see
rally.
maybe why Bernstein is actually finding this as an attractive valuation with a $168 price target and an outperform rating. The growth estimates for 2023 are around 36%, but I did notice that the forward multiple is only about 32 times. So effectively, it's still trading below its PEG ratio, which typically speaking, anything below 1 is considered
7.3%.
That's effectively its price to earnings relative to the estimated growth rate on a forward contingency.
The PEG ratio. Yes, so that being said here, you know, even with the recent run-up that we've seen, the year to date, it's up 55%, as I said, just in the last 3 months. It got that pop, it's up about 25%. And they're saying an attractive entry point, and I'm curious to see how, even though it has a highly positive outlook and all that, how would you go about the example trade here today? Because it has been moving a lot.
So I think... Yeah, so I think there's some short-term momentum obviously going on in the markets. I think Airbnb is partaking in that. We may end up being in a counter-trend rally as part of this overall correction, so we'll have to see how it plays out. But if you look at the chart, you'll notice using candlesticks, which I use, there's a gap around the 136 area, which also coincidentally corresponds to the 50-period moving average on the daily chart. So there's possibility that the stock actually just continues and may find some resistance at that area, 136. So what we can do is essentially we could swing trade this. In other words, looking for that potential target objective, and we can go out and buy the October. So we get some time and flexibility here. Monthly contracts. We'll buy the 130, 135 call vertical. So effectively buying the 130, selling the 135, and altogether. This trade is put on for about $2.50 a share in debit. So you're paying the $2.50. Break even is at 132.50 and max profit is at 135. So it's basically a 1-to-1 return on risk-based trade, and the objective is to have the stock hit that target at the very least by expiration of third week of October.
Right, understood. It's great to see this trade. Thank you always for our disruptors every single weekday. George Sills, really appreciate it. As we said, nice comments there on Airbnb.
Whoa, BlackBerry's
Thank you.
ripping.
All right, coming up next, our panel is standing by, taking a look
3-day rip
at the
on that
housing.
thing.
Home prices
Oh yeah, the takeover.
For the 5th straight month in June.
Target raise.
Our panel is ready. Coming up.
There's rumors of acquisition on BlackBerry. I don't know. That's what's continued this rally. Mullen. 11, 12%. Still surprises me how many people are in Mullen. GNS below BWAP. Not looking too good. Down 20%. Here you go, barbecue. 3.8%. Good. Little consolidation up here. First time in almost an hour. Alright, SPY, little red candle here. Still had a divergence on the RSI, which is crazy. Added a few puts just on that on that RSI divergence. Barbecue pop 4.39. A little inverse beta going on, huh? How high do I think it can go? Nah, I don't know. Lawsuits against trading firms? Good luck. I'm not bullish on this stock. Is that engulfing too on the SPY? Yes. Engulfing 5-minute candle. And RSI divergence. But that might not mean anything. I likes to go up. Go up. %5 on barbecue. The drummer been hitting different lately? Yeah, man, he's on something. Don't fall asleep while losing premiums. That's the best. At least you're sleeping through your misery. Trap music, oh my gosh. That's like that guy that was in here earlier just yelling at me. He was probably trying to trade. Hey man, how's SPY? How high will SPY go? Where are my puts? Where are my puts? You didn't answer me. It's like he's trading from a nightclub or something. 2150 on barbecue. We got here, Spy. Those nice puts if you start breaking there. People wasting my trades. I keep holding my 444s though, either way. Man, I really don't want to close my long-term SPY puts. That sucks. Would be something to have market crash in an election. GameStop's up 5%. Barbecue up 5%. See if we can break above that 22-cent resistance. 23.85 that we hit the other day. We're off. Out of these puts. Still holding the ones. Out of the ones that just opened though.
A lot of the builders are saying, well, you know, this is a tough environment because of the 7% mortgages and so on. And so many of them are going into the build for rent space, as I talked to you about before. That's huge. And it really is, there's a big spread between the monthly cost to own and the monthly cost to rent in a build for rent single family or townhome community or cottage community. So we're seeing those, you know, there was a little bit of a slowdown last fall, but it's starting to pick up in terms of rent growth there coming back and absorption rates at those projects coming back as well.
Final thoughts, Melissa, about any trends that you're watching in the next 6 to 12 months?
You know, I think basically the hope is that interest rates will start to trend down if that things stabilize in the economy, that the spread between the 10-year Treasury and the 30-year fixed rate, which is currently trading at over 3%, when historically it's at 1.75%. So if things calm down, then mortgage rates can come down naturally without the bond yield having to come down. But we are hoping and expecting that rates will come down starting sometime next year. And many brokers do feel that when rates come down, that more buyers will come into the market, which in some communities, in some areas, can actually push prices up.
Yeah, good to see you both. Thank you. On a breaking news day, lots of news coming in pertaining to home prices, and we'll get a lot more throughout this week. Brad Hunter, Hunter Housing Economics, and Melissa Cohn, William Ravis Mortgage. Thank you, Brad and Melissa. That's going to do it for us here on Trading 360. Thanks for being with me. I'm Nicole Petalides. I see you every day, 11 a.m. and 2 p.m. live from the New York Stock Exchange here on Schwab Network. So I'll catch you at 2 for the watch list. Keep it right here. Fast Market.
That was fun. NOx broke trend going to continue to go up. Yeah, 11 and a quarter. And a quarter. %on Coinbase, 8% on Run. barbecue of 4%. There you go, SPY. There you go, let it out. Let it out. You got a nice shoulder over here. Head you formed. Let's just another one. It's a head and shoulders above that 50%. I'm good with that. Unless it holds some supports, some moving averages, and back to daddy. You could think about just opening up strangles every morning, Bubba, since you seem to always just get puts right out the gate. Just get a strangle out of the gate, so you don't have to sweat it whichever way. That's what I'm saying. You buy calls when you buy puts. Like you don't even have to act like you bought calls. That never happened. We had Jolt's job data this morning. That was at 10. That's when we got this big spike. We've basically just ripped since then, more or less. Apparently it was pretty bullish. You definitely need counseling, Bubba. I mean, that's definitely...
does, because if Jerome Powell can keep unemployment at 3.5% and job openings start coming down at this pace, that's a soft landing. That's the Goldilocks scenario, and that's why I think stocks have picked up the pace here today. Consumer confidence a bit lower, But overall, remember, it's the economy and the stock market. Two different things, and sometimes that relationship is congruous, and sometimes it's works against, where a softer economy is a better stock market, and that's what you're seeing. These numbers are good, but they're not they're bad, but they're not scary bad. So listen, I think the market is reacting to data that is just what it needed.
Yeah, I think the Fed probably likes to see that, especially job openings coming in. That's a
big drop.
Coming in under 9 million there. So maybe some tightening in the labor market that look for jobs maybe not be as easy as we expected. But two names that are up over 2%. And I guess if you're going to have a risk-on day, take a couple of stocks that are off of 10-year lows and upgrade them. Let's bring in Caroline Wood, senior markets correspondent here on the network, to help us break down this story. You know what, Caroline? This is called fast market. We typically don't talk about AT&T and Verizon much anymore just because they've been on a downslide. But a couple of upgrades today.
That's right, and we're seeing shares pop. As you said, both companies are up more than 2%. AT&T up about 2.8%, Verizon up 2.3%. But in reality, these are two really beaten down stocks so far this year. Verizon's down 13%, AT&T is down a little more than 20%. And Citi says now is the time to buy both, upgrading both telecom companies to buy from neutral, unchanged price target for AT&T of $17. And if you just take a look, AT&T currently trading at $14.60. Meanwhile, Verizon, the analyst upgraded his price target on Verizon to $40 from $39. So not necessarily more bullish in terms of price targets, but says now's the time to buy. The Citi analyst points out that a variety of concerns have really weighed on sentiment and valuations, including competition, industry structure, higher rates, and lead cable contamination. Of course, back in July, the Wall Street Journal published that report warning of potential dangers of lead cables that have been left abandoned. That's been really weighing on shares since. However, Citi now sees a more constructive investment case for large cap telecom companies and makes the case for a bounce back, pointing out that market caps for the telecom companies with possible lead cable exposure are down $21 billion versus an estimated $15 billion of cost of remediation based on the latest disclosures. And also Citi's estimates says the competitive environment for wireless is showing positive signs of stabilization that should help operating performance. Points out that industry postpaid phone growth is on pace to exceed this analyst's prior expectations and the consensus, which he says is a surprise. Also thinks AT&T and Verizon are in a spot where they can actually increase prices at the same time as cutting costs, which should help. So definitely giving a boost to AT&T and Verizon today, as we said, up about 2.7% and 2.3% in terms of the numbers. But I will say this Citi analyst still says that despite the fact that those two are buys now, T-Mobile is still his top pick in the space.
Yeah, Caroline, the Citigroup top, he said wireless environment stabilizing. Wireless was unstable? Every human being in the world has a cell phone. How could this market be unstable and now stabilizing? Now, I get the lead exposure risk is kind of it's lingering out there, and it's not insignificant. But, man, how could a cell phone company... I think they've got so much debt. I mean, telephone has a lot of debt that they're trying to pay down. But boy, you would think these companies would be doing a lot better than they are, Caroline.
I think also some of the stabilization could be in terms of the competition that these companies are seeing. So yes, everyone has a wireless plan, but they don't necessarily have to get it through AT&T and Verizon. There's obviously lower cost carriers out there, and people are looking for basically the best bargains at this point, which is weighed on Verizon and AT&T shares. Going back to that T-Mobile comment, though, from Citi saying it's the top pick, when I was actually taking a look at the breakdown, and I was talking about this with Oliver this morning, T-Mobile is the top pick of Wall Street analysts in general. If you take a look, 90% of analysts have a buy rating on T-Mobile, despite the fact that it's actually only down about 3% year to date compared to bigger losses, those double-digit declines for Verizon and AT&T. Whereas when you take a look at Verizon and AT&T, Citi says it's time to buy. but 70% of analysts say it's time to hold Verizon, so definitely more cautious, and 60% say it's time to hold AT&T. So not as much bullishness there. All of the price targets are higher than where these companies are currently trading, but definitely some more caution around those names. We'll see if that changes at all as some of these, the stories around the lead and maybe some of the settlements come to fruition. But positive day for AT&T and Verizon today, kind of bucking the downtrend that they've been seeing.
Yeah, we'll see how long-lived it is. And T-Mobile, as they mentioned, they've been eating their lunch for the past couple of years, especially after that Sprint merger. So we'll continue to watch these names. Thanks to Caroline Woods, senior markets correspondent here on the network, breaking down that story. I do have some breaking news, though. Apple just announced their September 15th launch date for their iPhone 15. Wonderlust, it's called. So they'll probably be releasing some new products on that date. The stock
named
is
the phone Wonderlust?
No, that's the name of the event that they're having.
I was going to would they run out of numbers? I'm like, oh my goodness. I'm like, sorry.
Yeah, the stock is at session highs as we speak, but September 15th, the new launch. All right, let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research, to join us. Randy, I wanted to get your take here on the moves. I mean, it kind of makes sense. It's a risk-on day. Equities higher on the worse than expected data.
I think it makes previous high, then turn bullish again.
The dollar came off of session highs. What's your take here on the markets?
Well, I think Kevin hit it on the head earlier. He's exactly right, and I totally agree. Almost all the economic data, not just today, but over the last week and a half, has been just exactly what you would hope for if you are trying to engineer a soft landing, as the Fed is, which is that all of the data is coming in just a tad below expectations. It's not spectacular enough that they have to worry about inflation. It's not horrible enough that we have to worry about a recession, but just slightly weaker than expected, which is exactly what they're trying to do, is just cool the economy a little bit slower. That's a pretty good environment in general because it's sort of hitting that Goldilocks sweet spot, if you will. We've seen a lot of negativity. I've been commenting on it quite a bit lately in things like the equity put call ratios. The equity ratios tend to have a lot of retail investors involved in them. They've been hitting what I call extreme bearish levels here for about a week and a half to 2 weeks. And those tend to become very contrarian when you have that. It's one of the reasons I've been expecting the market to move higher. I was expecting the market to move higher at the beginning of last week, and why it's expected to move higher again this week, because while we have institutional money that's looking into this market, the retail investors are starting to pull back. And as you guys know, they tend to be wrong and they tend to be late. They react to the market. They don't react in anticipation of the market all that much.
Yeah, let me give you a scenario, Kev. You've got JOLTS that came in 8.8 million, weaker than expected. You've got U.S. consumer confidence dropping. I'm surprised that it took like maybe that extra month to start dropping from those 2-year highs. But is this setting up for? Give me your take here. Is it setting up for some economic weakness? Maybe, the economy's not going to be as robust as the Atlanta Fed GDP now is saying, and that we are going to be maybe 2%, maybe a little bit lower. Do these numbers equate that anything
the lows of the day down 26%?
Jerome Powell probably had some things that were keeping him up at night. Here's the new thing that can keep him up at night. Economy going, slowing down too quickly.
Yeah.
And like,
right.
And that, if it starts decreasing at an accelerating pace, that's the other problem on the other side. But that means he'll stop on rates.
Right.
That means lower rates are not close, but closer.
Right.
And now the only thing left is the inflation data later in the week. Remember, core PCE, headline year-over-year PCE, both expected from the consensus to be higher than they were a month ago. So there is some issues out there. That's why I mentioned this was the first data point of the week. There's a lot coming up that could change the tone, but the first one, really good.
Yeah.
Really good data. So, yeah, Jerome, but is there always the fear this ball rolling downhill, I can't catch it now, and it's going to go further than I thought.
Right.
Yes, that is another problem.
Yeah, maybe consumer spending pulling back. We've seen credit card balances start to rise a little bit. Interest rates still elevated, even though we're getting that pullback.
The U.S. consumer is the engine.
Yes.
You don't want to put that fire out.
Yeah, and we've got wages that are growing at a moderate pace, but maybe job openings coming down a little bit. Might put some pressure on that, where people won't be able to move jobs, right? Maybe that wage growth will slow down a little bit. Randy, when you look at the equity markets, we're busting through some key resistance levels that we've had so far this month, with the S&P, NASDAQ, and Dow breaking through the 50-day moving averages to the upside. But, we're still down so far in August, and historically, September is one of the worst months out of the year. What's your outlook moving forward for not only the markets but the general economy?
Yeah, so that's something to be concerned about. Seasonal patterns aren't perfect. They don't always work exactly as expected, but we've had 3 consecutive years in a row of down Septembers. Not terrible, 1-2%. We had that obviously already in August. So if you're looking for an opportunity to get into the market, I would say at this point you might want to be cautious, and that doesn't mean don't get into it. It means buy in very small quantities. Remember, commissions are free. You don't have to buy 100 lots. You can buy 5 lots and 10 lots and things like that. If you're looking at stocks that you own or stocks that you'd like to own, and you get a little bit of a down dip in a day, just nibble away at them and buy a few of them. But there's very good reason to believe, because of seasonal factors, because the market has been kind of stagnant here or even down a little bit over the last month, that this seasonal issue may come into play again. Maybe by the time we get to October, things are going to be okay. I think that's probably the case. We know from the futures market that the odds of a Fed rate hike in September are very, very low, but they've picked up quite a bit for November. And if you combine the two, which means, if you don't get it in September, then the November plus the September number, that's up closer to 60% now. That's very close to that threshold, which historically has been 65% on whether they do it or they don't. So the markets essentially right now are pricing in one more rate hike, and it's in the month of November. So I don't think that's going to derail the markets at all, but I'm just saying seasonal factors, I think you need to be a little bit cautious here in the month of September. But I've said this for months, and I continue to believe we're probably going to see the year-to-date high before we get to the end of this year. So there will be opportunity a little bit later in the year. But sure, as Kevin said, the Fed's always got something to worry about. We're either hiking or we're not hiking, or inflation's too high or it's too low, or the labor market's too strong or not strong enough. There's never a time where we can all just sit back and say, everything's perfect. That just doesn't ever happen. This is kind of how this market always works.
Yeah, we've been through a lot of these ups and downs, Kevin, over our careers, and I'm sure Randy has also. But
20 years ago, I had hair like Randy before I started worrying about these markets.
I think mine was about 17 years ago. Yeah, I had no boss of mine that shaved mine off. But Kevin, if you look at this, when I saw the interest rates start to fall after the data points came out, I thought for sure.
What's that information telling us?
And Randy just mentioned, I thought for sure that we were going to see a pullback in expectations for another rate hike this year, but they haven't really come down.
Yeah, but you still may, right? I believe me, I said this the other day on the show. I think Jerome Powell wants to be done, and this data, and here's the most important thing. This is the first data point in a heavy week for data. There's still plenty of, the old saying, Tom, there's still plenty of time to ruin your week.
That's true.
Hold on a minute. We're having a really good day today on really good economic data, favorable economic data. But there's a long week, culminating with the #1 data point of the month, which is non-farm payrolls that we're getting on Friday. So long way to go here.
Yeah, and Randy, leading today, real quick, NASDAQ's leading back. You got Tesla up 6%. NVIDIA's bouncing. We're going to talk about that later, bouncing over 3%. You got Google Alphabet rallying here a little bit. It's kind of hard to take the bullishness out of the market when you're getting these big leaders, these mega cap tech names rallying, right?
Yeah, exactly. And in fact, when you have a risk on day, people do tend to go to those big mega cap names. And in fact, at the end of the week last week, for the first time since March, excuse me, the market sectors have gone fully cyclical. That means out of the 11 sectors, the top 7 were all the cyclicals. The bottom 4 were all the defensives. That hasn't been true since March. That means that it's full risk on. People are going into all the growth sectors. And again, it shows an improvement in the sentiment of the marketplace overall, but we've still got a ways to go. And again, an interesting thing about the number on Friday, I agree with Kevin, it's always the most important report that you get each month. The one that the forecast for the non-farm payrolls on Friday is expected to be the lowest since December of 2020.
Yeah.
Now, that doesn't mean it will be, but that's how low it's expected to be. But there again, it's still very positive. It's still up around 187, I think 190,000. So it's a perfect sort of Goldilocks scenario where the labor market is holding up fine, but it's not taking off too fast. And as you mentioned, yes, you do have wages, but the wage growth is slowing. I think an important number to watch is also going to be average hours worked. We've seen it pull back a little bit in that. And we've also seen, if there's data out there that talks about the fact that, a lot of the companies are trying to get their employees to come back into the office. A lot of people don't want to do that, and some of them are quitting their jobs. I think we're going to find they're going to have a difficult time finding something else that's as opportune as what they had. So there's a lot of stuff churning sort of underneath the surface, but in general, it speaks to the overall consensus that Kevin mentioned earlier, which is this is the sort of the soft landing scenario. You couldn't have really planned it out, I don't think, any better than what we've seen so far.
Yeah, and I've heard any estimates anywhere from like 150 to up to 170. So there's some people out there. There's some revisions that might be in there also over the last 12 months. And to your point, Randy, watch that productivity number. That could offset some of the fears that the Fed has at this point if we get some decent productivity numbers. All right, guys, let's take a quick break. When we come back, we're going to take a look at Oracle. The cloud tech giant is spiking on the back of an upgrade ahead of their earnings in a couple weeks, up nearly 50% so far this year. We're coming right back.
Still consolidating. See if it wants to make a new high here. Got a head, we got a shoulder. Also have an inverse or a divergence on the RSI. MACD's not bearish. Does get one more blow. Blow up the top. Barbecue's holding strong, up 6.6. There's your new high on the SPY.
Like you said, it's a big company that is extremely profitable, but oftentimes doesn't get as much media attention as some of these other big tech names. And obviously AI is sort of the buzzword of the year, and it's been driving pretty much a good chunk of this market since the beginning of this year. So certainly that's an important factor. So yeah, I mean, I think this is something that if you're looking for an opportunity, there may be one out there. If you believe that is going to play out. Now, keep in mind, NVIDIA's had some big moves, but it also sold off on the last earnings report and has been very, very volatile. So there could be a little bit treacherous out there.
Yeah, Randy, and they've got earnings in a couple of weeks, but we wanted to talk about it today due to the fact that it did get this upgrade, price target up to 140 from 120 out of UBS. But how do you want to look at this from an example trade perspective?
SPY up 1.25 now.
My personal opinion, we're just trying to provide an example. If someone believes that price upgrade is valid,
a huge
if
day
they
on the
believe
SPY.
the AI momentum is going to
massive.
benefit the company. If you look at the history of earnings reports, there's very mixed results. Oracle sometimes has gone up, sometimes it has gone down. As you said, it's doing very well year to date, up about 47%. It does have a tendency to trade kind of sideways a little bit prior to earnings. We got about 2 weeks ago, it's getting a little bit of a bump today. In fact, the trade example I put on, I've had to change the price a couple of times already because it's moving higher, as we talked about earlier with the tech sector today. But if you believe these things are all valid and you think there's an upside opportunity here, again, that's no guarantee that's going to happen. But if that were your perspective, there's a lot of different trades we oftentimes talk about. A lot of times they have risk defined, and if they're two-legged trades, they have an upside maximum profit. A lot of times people want to leave their upside open, but that can get a little bit expensive. So one way of doing that is you can leave your upside open by selling off some of the potential downside or taking a little risk to the downside in case something goes wrong. A way you can do that is to do a combo trade that's often referred to as a bullish risk reversal. And essentially you're trying to set up the ability to move to have upside opportunity
GNS new low on the day,
but downside risk similar to owning the stock, but for a whole lot less cost. So
yeah, that's not
the
good.
example I put together is, since we know earnings are coming out on 9/11, has expiration dates on 9/15. Let's say we looked at the 9/15
not what the bulls want to see.
Call. We would buy that to give ourselves an unlimited upside opportunity. It's a pretty expensive trade, and calls have a lot of time value that work against you. You can help finance the cost of this trade, bring it down, and reduce the impact of time erosion by selling an out-of-the-money put option. I looked at the 112. That brings the cost of this trade from about a $4.50 cost down to about $3.10 the last time when I put this together a little while ago. So with this, you've then got, if your upside's a 120 call, if you pay 310, that makes your upside break even at 123.10. The good thing is beyond 123.10, you've got unlimited upside potential in case you get a huge move on this one. But here's the key. This is not a risk-defined trade so much as some of the others we talk about. You have to be a willing buyer of this stock if it's below 112 at expiration, because at below 112, the short put that you're selling is going to be assigned to you, or you'd have to go out and buy that put back. In most cases, probably at a potential loss. But because of how this trade is set up, the two strikes aren't identical. So that means you've got this sort of dead zone in the middle. Between about 112 and 120.
Yeah, GNS flushing a little bit there, down 31% now.
You would lose would be the cost of this trade, so that's $3.10. So you got unlimited upside beyond 120. You're going to lose 310 from 120 all the way down to 112, and then you got to be a willing buyer down below 112. But this is a way of putting on essentially a bullish call spread, a bullish call trade, but bringing the cost down a little bit. Again, as long as you're a willing buyer and you've got the money to finance the cost of a round lot on this thing at a price of 112.
All right, let's take a look at this. Out in the September 15th monthly cycle, so about 17 days till expiration, buying the 120 strike call, helping to finance that purchase of the bullish call, selling a cash secured put, the 112 strike put, paying roughly about a 310 debit. It might be about 320, 330 now. The stock has moved up with the overall market here. But if you pay a 310 debit, your risk is going to be about 11,500. That's if the stock were to go to zero. Got to keep that in mind. Not expected to do that, but it could possibly happen. But you're paying 310, Kevin. Your break even 123.10 to the upside. You're capturing earnings on the 11th on this one but you got to be prepared to buy the shares if it's below 112 and you're still short that put.
Yeah, start with a bullish posture, right? Once you get there, then if you want to look at a less risk or less capital outlay way to get long 74 deltas in this name, this is a way to do it using options. And there's that chasm between 120 and 112 where you only lose that amount of debit. But if you get a move above 120 for a less expensive level, you have unlimited upside, much like you would do with stock. But like you said, there's a cash secured put in there, right? Chipping away at the overall price of that call. Is it the most efficient way to do it? It's more efficient than buying the underlying and having that risk. So this is just another way to use option to get long close to 100 deltas without just a straight diagonal line up in terms of delta exposure.
Yeah, and going into that September 15th expiration, the option market's pricing in about an $8.40 move. Yep. That's about where that 112 strike is below the current share price in Oracle. So you do have that cushion, as you say. You still have risk of about $310 down to that 312 strike, and then it drops off. But a good look at a bullish risk reversal here in Oracle on this
Mullen in court.
Thanks to Randy Frederick, Managing Director
What's
of
the
Trading
court
and
actually
Derivatives
about?
at the Schwab Center for Financial Research, for joining us. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Celsius Holdings. They make that energy drink. The stock hit an all-time high today. It's on fire.
We don't know. This channel pumps Celsius so much.
Kool-Aid? I'm not sure. We're going to find out. Fast Market's coming right back.
Got a doji there on the 5-minute candle on SPY. Still RSI divergence. Making a third one.
All right, welcome to NBC News Daily. We begin along the Gulf Coast of Florida, where people are racing to either evacuate or make last-minute preparations with only hours. All right, welcome to NBC News Daily. We begin along the Gulf Coast of Florida, where people are racing to either evacuate or make last-minute preparations with only hours to go before Idalia is set to slam the state. The National Weather Service is warning people to prepare for flash flooding and potentially deadly storm surge. Idalia officially reached hurricane status today.
Forecasters say it will likely become an extremely dangerous Category 3 hurricane by the time that it actually makes landfall tomorrow morning. Idalia could be the strongest hurricane to hit Florida's Big Bend region in more than 70 years. So far, nearly 24 counties have already issued evacuation orders. That's about a third of the entire state. Earlier today, Governor Ron DeSantis said more than 5,000 National Guardsmen are standing by, along with nearly 6,600 search and rescue crews.
this morning to be able to make your final preparations. If you are in one of those areas that's in line for some of the major storm surge and you're told to evacuate, you have time to do that. But you got to do that now.
Oh, morning, Jay.
All right, we have team coverage from all angles. NBC News meteorologist Bill Cairns is tracking Idalia's movements. But first, NBC News correspondent Priscilla Thompson is in Cedar Key, right in the crosshairs of the hurricane. Hey there, Priscilla. We know that officials there, they're ordering folks to leave the island right now because they may not actually be able to get across the bridge once that hurricane hits. Is that sort of the reality there? Are most people leaving at this point?
Yeah, Morgan, as you can see, this street is almost empty. Just an hour ago, there were cars lined up here continuing those hurricane preps, but it appears that folks are getting out, and these are some of the preps that we're seeing. This is a business that is almost entirely glass, and what they have decided to do is open the windows here and in the back of the business, hoping that they will allow that water with up to 15-foot storm surge, 150-mile-per-hour winds to just flow through this business. They're hoping that it will allow this building to remain standing, and that is what folks are worried about. These businesses are right along the waterfront. We saw another business owner just a short ways down, literally clearing out everything from her shop, putting it in a moving van because folks are very worried. I want to play a bit of sound from both of these business owners. Take a listen.
It's down here. North of Tampa.
This is one of the few times that we've actually evacuated the whole store. But it's pretty nerve-wracking to see it coming right at you.
We're under a lot of stress. We don't know what to foresee at this point. We know what to expect of these storms. We don't take it lightly.
And this is one of those counties that is under a mandatory evacuation order.
Yeah,
folks have until 4 p.m. today to get out, but already it appears that people are getting on the road and heading inland. Morgan, Vicki?
It is good to hear, Priscilla, that people are heeding the warnings. We always seem to see, though, some people stay. They look to ride out the storm. What is the state doing to prepare for those folks?
Shoot them.
Yeah, so two big messages for those folks. One is folks need to act now, and if they are under that evacuation order, they need to prepare for those folks. Yeah, so two big messages for those folks. One is folks need to act now, and if they are under that evacuation order, they need to leave. The governor really emphasizing that it does not mean that you have to go hundreds of miles. It could just mean going 10 to 20 miles up the road to get further inland, to get on higher ground and potentially protect yourself.
It looks like it changed its trajectory to be a little more north. It's actually good. There's less populated. It pulled further away from Tampa, basically. So I'm gonna cut right through kind of the skinny part of Florida and go up to Georgia.
It had doubled over the last couple of years, but there was still a lot of runway to go. And so I think, when you're talking about small companies in big markets that have their own niche that consumers love, there can often be a lot more upside than just a double. As fantastic as that sounds, there could be a lot of runway to go from there. And so I think sometimes as investors, we get a little too quick to take profits on our winners, or a little too quick to dismiss a stock because it's already doubled in the last couple of years. If it's small enough and in a big enough niche with the right consumer base, it could run for a really long time.
Andy's talking right into my soul there. You just exposed me on live TV. That is every trader's nightmare. Getting out too early. Yeah.
Oh yeah, that was.
I just had a shivering moment.
Yeah, that's from growing up on the trading floor. Yeah, I think too much of that. But Andy, you guys have been on every few months talking about this stock, and I think people that have watched probably would thank you at this point. But when you look at the stock, the way that it's moved up and, valuations growing, maybe their numbers support it or not. Happiness levels, are they there? And if they reported earnings again, would you guys still be bullish on this name?
Yeah, we've got happiness just barely above Monster. I think that's starting to just kind of even out a little bit. I think things are starting to even out a little bit, and the massive, very fast growth portion of this is probably somewhat played out because, like we said, this was a company that was nascent. I mean, no one even knew what it was 2 or 3 years ago. It was all Monster. and Rockstar, and so they've flattened that gap. They've eliminated that gap almost. And so I think this is a company that's now in a spot to be a growth play, a really nice growth company. They execute really well. I think they continue to grow, but the speed just can't be there because the market just can't grow that fast. And so I think when we look at this from here, we think this is a company I want to own on dips. I think eventually it gets a significant pullback as Wall Street has to recalibrate some growth expectations. But from a core fundamentals of the business, this is a company whose executive team is awesome. They execute like crazy. They're in a growing market. And so this is one I think from here you put on your radar and you say, if this gets a significant pullback, this is still a great company to own long term.
Yeah, I like that angle. Maybe supporting cash secured puts if people wanted to wait. Yeah. Something on the downside if that's the way that angle that you have. And I think that partnership with Pepsi that Kevin mentioned earlier, that was just game changer for them because they're in every Pepsi market at this point. All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us. A couple things I wanted to mention here, Kev, before you get into your example trade. 76 million shares outstanding only, small share float.
Yes, not the smallest, but still very small.
Yeah, lower than maybe the average. Yeah, probably in the bottom 1/8 of a quartile there. So that's also taken into account. So, and the move higher that we've seen so far.
I'll give you the number. Here's the numbers on the move higher. Their forward PE 105. Monster's forward PE 38. The NASDAQ 28.
And Monster was always considered elevated or overvalued a lot based on that.
Right. So it's not without risk.
Yeah.
Right. It's still a young, growing company that's doing extremely well, but the stock it's not without zero risk.
Yeah.
So that's why the strategy that I looked at here. What do you do if you think it might go up? But it also could correct on any deceleration in growth. Could hurt this stock. So what I did, Tom, I played for movement. I played it a little safer, but I played for movement. I did a long iron condor. I went out to September 15th. I bought the 190, 195 call vertical, bought the 180, 175 put vertical. Tom, this stock was just in the 160s, right? So over the next 2.5 weeks, you've got a chance to, you got to spend about $3, but you can make $5. You can make $2 on this.
Right.
But it's a way to not, think bullishly and lose money when I think it can move.
Right.
I think sometimes it's nice to play direction. It's easy and you get to be bullish. But what about if you play, it's going to move? I don't know which direction, but it's going to move. That's this trade here.
Right. Yeah, let's break this one down. Kevin, buying the Iron Condor here, September 15th, monthly cycle, so 17 days till expiration. Buying the 190 call, selling the 195 call. There's your long call vertical. And then buying the 180 put, selling the 175 put. There's your $5 wide bearish put vertical.
All right, head, shoulder.
About a $3, $3.05 debit on it. That's what we got up here. Takes your break evens just above 193.
I'll add to the
on the
SPY.
upside.
I really only
just
have like
below
one trade left though.
177 on the downside. The option market's pricing in a plus or minus about $12.5 move in the shares into that expiration cycle. And this would be,
in case I want to go long.
Right. I made sure I was inside that on both. That's why the premium's a little bigger.
Right.
If you wanted to go further out, you could lower that premium, but I want to make sure I'm inside those moves. I don't need to, make hit a home run here, but I want to hit a double.
Right, if you get some of that movement over the next 2.5 weeks. Risk on this, $305 per spread if you pay $305 debit on this, but you're playing for a move over the next 2.5 weeks with this type of strategy, so keep that in mind. And remember, implied volatility at or near 52-week lows. This is cheaper to purchase when implied volatility is contracted after we had earnings and we've seen the run up too. So a good look at a long Iron Condor here. All right, let's take a quick break here, Kev. When we come back, we're going to discuss NVIDIA post-earnings. Kind of wanted to hit on this one while it was down, but rallying over 3% today, so making some ground up after another stellar earnings report. We're coming right back after this short break.
Do it, do it.
I think it's acted pretty, you know, they sold it off a little bit out of kind of a sell the news thing. It's kind of held here. It's only $10 or $12, $15 below the all-time high. Right. It's hanging in there pretty well from everything that's happened. So this stock is up 200% this year, Tom. Yeah. I mean, people that, I mean, you know, everyone should be reasonable with their expectations for this name, and a little consolidation here isn't the worst thing in the world. Right. Consolidation without a significant sell-off is pretty, it's pretty good. So 90% market share in AI, but they've also got the highest valuation of all the AI stocks. So it's not without some risk up here.
Yeah, let's expand that conversation on valuation. Let's bring in, I believe we
have Head and
Shoulders,
Shoulders. Let's see if
correspondent here. George,
the shoulder and break the neckline.
You know, when you look at this, Kevin mentioned valuation. I think that's a thorn in the side that a lot of investors and traders have is competition's coming down the pipeline for NVIDIA. Does that make them susceptible to these valuation levels?
Well, that's a good question. So I think what's happening is if you think about the accelerated complex computing technologies that NVIDIA supplies the marketplace alongside their Omniverse cloud, they're basically becoming essentially a complex computing hardware company alongside basically a software as a service company. So I think if you integrate those two things together, there's still some tremendous growth available for NVIDIA, but also, you know, with the price action nearing, you know, all-time highs, which were published last week on the earnings day, getting close to that, you can actually say the stock is actually cheaper from the standpoint of earnings per share or its multiple, considering that it was trading around 50 times forward earnings. And if you look at now 2023's estimated multiple, it's around 43 times, and 2025 is at 29 times. Now, that's, again, expensive, but it may not be expensive for a stock that's growing tremendously when it comes down to earnings per share. Just the revision and guidance that the company provided from the last quarter for the full fiscal year, we're over $10 a share now, whereas prior to the earnings release, it was around $8 a share. So that's a 25% increase in the estimated earnings per share just from last quarter's results and guidance revisions. So, you know, at the end of the day, you know, I can see why a lot of the analysts are still very bullish and constructive on price targets that are well above $500. It is cheaper from a multiple standpoint, and that's, again, something you have to consider despite the fact that the stock is at or near those all-time highs that were published last week.
George, you are never going to hear me say anything negative about the quality or the job that NVIDIA is doing. But here's the nightmare fuel scenario for people long NVIDIA. Netflix. Netflix is the clear leader in streaming, right? The number one, they've done the best job, they're the leader. Their stock was $700, now it's $426. They're still the leader in streaming, but the stock is almost down about, let's call it 40% off its highs, George. Take out NVIDIA and AI, put in streaming. Competition and all things considered, aren't we looking at just the same story playing out here?
So in the long run, yes, I think that's going to be the case. Absolutely. I think competition will start to erode margins for NVIDIA. Competition will erode top-line sales for NVIDIA, and eventually the earnings growth will start to subside. I think what's happening here is we're sort of seeing the development of a Cisco systems versus an Aristanet. What I mean by this is you have Cisco systems, which led for such a long time because they integrated high-speed technologies and network gear alongside software. NVIDIA is a leader in accelerated computing and discrete graphics processing. In terms of their technology, there's no one that can compete with them right now. But I think what's happening now is they're relinquishing away the market for general purpose graphics processing. I think AMD is going to pick up that particular market. So at the end of the day, pricing power is still intact, top line sales is still intact, but eventually maybe enterprise businesses will realize they don't necessarily need as many of these higher end complex computing chips, and they may end up going down the value chain and looking for more scalable general purpose graphics chips. I see that happening across enterprises because at the end of the day, they want to save money as well, but they want to get the computing power. But they may realize now that maybe NVIDIA's chips may provide too much computing power than they need, and they may end up scaling back to general purpose chips from AMD. So I don't think AMD is there yet to compete with NVIDIA in terms of technology, but I do see AMD increasing their market share for the total general purpose GPU chips versus the narrow high-speed chips that, of course, NVIDIA supplies.
Yeah, I think for the next couple quarters at least, that competition is not going to be there. We'll see. AMD is supposed to release
at the end of the year, but Tom, all these big tech firms with capital to spend on R&D are throwing everything they have at AI chips right now in terms of R&D.
Right, and look what we mentioned earlier, Oracle.
Yeah. Yes.
They said we're spending billions on these. All right, thanks to George Tillis for breaking down NVIDIA post-earnings. Now, Kevin, I wanted to look at this because I wanted to talk about NVIDIA post-earnings. A lot of times we don't talk about names after earnings, but I think this was worthy of one.
Up on 1 o'clock.
And I think part of the drag down in NVIDIA was the drag down in the overall market.
Pretty big market pump.
NVIDIA is not immune from those market moves, and I think that's how I'm setting up my strategy
Barbecue's
here.
Up almost 5%.
In NVIDIA, my example trade.
GME's up 4%.
And I looked at just selling an out-of-the-money put vertical to the downside that's neutral to bullish in direction.
Down 27.
If you think this stock's going to either consolidate, go higher, or even go lower, but stay above a specific strike. So we're out to the September 29th weekly cycle that expires in 31 days. Selling the 460 strike put.
Might be building a little head and shoulders.
That's out of the money to the downside, nearly $30, and then buying the 440 strike put. So it's a short, neutral to bullish $20 wide put vertical, Kevin. We've got a 470 credit on it. I think it's closer to 570 credit. I think it's closer to 530 at this point. But if you collect a 570 credit, that's what you can profit on this one. Takes your break even down to 450, 430 to the downside, Kevin. So you've got that nice cushion. What's your thought here on? Everybody loves NVIDIA. There's price targets of 1,100 out of Rosenblatt at this point. So big price targets out there, but this is a more conservative type of trade.
The key is to stay risk defined. Even if it's a big boy spread like this, you still got to stay risk defined. This gives you that passive income where you don't necessarily need to stock go straight up. If it consolidates here for a couple weeks, that's perfect for this spread. Now, is there risk? Of course there is. There's risk in every trade you put on. I can put a scenario where that trade would be at risk. But 3 of the 4 scenarios, this is profitable in, right? If a big sell-off in NVIDIA were to happen or in the overall market, NVIDIA will be affected by that. But that's why you stay risk defined.
Yeah, and the probability of that break even just under 455, the break even for this trade, nearly 70%. So you've got nice probabilities in this type of example trade. And remember, stocks aren't immune to moves in the overall market, even though they might be doing well. I think that's kind of the theme for that we wanted to kind of bring up. But having some assignment risk on that short 460 put also going into expiration over the next 31 days. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
a little bit on that right shoulder. $4.5 on barbecue. GME still at 4. Here on VWAP. All in went back to break even. AMC still up 2.8. GNS rebounding? Selling off pretty bad before. Yeah, a little bounce, I guess. Head and shoulders on the daily. On what? Buy? Buy, reaching back for those highs. Tempted to close these puts. Good time, be patient. 1 o'clock. It's definitely tapering at the top here. I mean, you can see the aggression of the channels and the pitch that it was climbing has slowed significantly. The VWAP move would be maybe even a breakthrough VWAP. Whoa, why? Oh no, that's IE. Up 1 1/4. MacWest still trading. Not BK yet. Are you going to come down on this thing? Jacked. Oh, they've come down quite a bit. Excuse me. Big bounce on these. Coin, Airbnb. Got risk on like they're saying. A lot of risk on. Up 3%. Peloton's still bouncing out of its earnings sell-off. Safe's up 4. AMC's up 2.5. Lyft is up 3. EBIC's up 7. Could hold that one longer. % on barbecue.
as they do consider the FTC's antitrust lawsuit against Amazon at this point to be imminent, but they still all in all
looks
keep
like it's
their buy rating,
going
which
for a
is
double
very
top,
odd
maybe.
to me. So they actually must not see these headwinds being that significant. This name, though, as far as analyst
GNS just
goes, of the
kinda
55
kept cooling
analysts
down.
covering it, 52 have buy ratings, which
filling some of
this
that
is
gap.
pretty much one of the strongest buy rating names that we cover, Alex, and there's a good reason. I mean,
Nice about
it is up now
stop losses.
65% off its
Big
52-week
profits.
low. One of the most strong and stable performers of the mega cap names.
But still so far from those all-time highs. So there's that perception that there might still be more to go for many investors. The key difference to me when we talk about a name like Amazon and why it is the name like Amazon, one of 5 names that's in this trillion-dollar universe. If we were to imagine kind of the revenue when it comes to like pet services and pet supplies, it's basically the entire pie. If you talk about Chewy, it might not even register on the pie for Amazon. So it just kind of goes to show the levels that are to this. But I saw some kind of strong words from the company leadership trying to get people back into the office. So we'll see what that means as well for the company. Maybe it boosts productivity. Maybe they see some natural attrition as well, bringing down costs. But always a name to watch. Very few names. You're talking to Apple's, Microsoft, Alphabet's, NVIDIA's of the world are on this list that can really move the market if something were to happen.
And I did see that news yesterday that they're going to be boosting their threshold for non-prime users to then make you pay more for that bare minimum. So sort of taking a page actually from Netflix to get people to pay more or just then sign up for Prime, which to me is like the easiest decision
Especially with your
ever,
position sizing.
Obviously that is,
I'm assuming
I'd say, so depending on if you live in an urban area
more
where
than-
this is truly a game changer. But our last name today is Airbnb.
More than 3% of your
Airbnb
portfolio.
Also with some analyst news today. Bernstein did rate the stock as an outperform, saying investors should now be buying the dip. Airbnb stock has lost about 13% this month, and we've seen about 10% of decline since the second quarter results. So these analysts said that despite a relatively inline print, raised guidance for ADRs and margin, many of the bear cases now largely discredited this quarter for Airbnb. They do still remain highly positive on the long-term outlook and see this now as a compelling entry point. 41 analysts, though, this name is not as skewed to the buy side as, say, in Amazon. 15 buys, 21 holds, 4 underperforms, and 1 sell. So average rating right now stands at around hold, but the average price target implies about 8% upside from here at around 143. So, and this name, to sort of stick with our theme of, overall market strength, this name is also making a nice almost 5% move to the upside today.
Yeah, and so I'm not going to say whether or not this call from Bernstein is ultimately how things will play out, but you go through it and you talk about some of their reasonings, it makes a ton of sense. They say that this company is coming back to gaining market share from traditional hotels,
Double
the
top
fastest
there
growing
on
online travel agency. And they basically say that, hey, these things and reasons that people were laying out to not be positive in Airbnb, Jenny, well, those are being discredited now. Stocks pulled back. They like the entry point. All of it adds up to me.
Yeah, I mean, a pretty strong, obviously, note there on Airbnb as far as analyst coverage goes. Anytime you see an analyst saying, buy here, I typically think that's seen as a positive. But we'll be moving forward today with our 2 upvotes. Those being, I'd say that the names that go closest hand in hand, even though Amazon is obviously so much larger than the pet space. But we'll be looking at at least the places that we purchase our pet food, that being Chewy ahead of earnings, as well as Amazon. We'll be diving more into the technicals in both of those names, as well as looking at some example trades. Stick around. Next Gen Investing will be right back.
Nice little double top. Getting some more puts. All right, leave a tiny bit for one last small trade. 15.
Here, I'd like to welcome in Rick Ducat, our chart master, as always. Rick, we'll start things off with Chewy, which does still have yet to report Wednesday after the closing bell. This name, though, definitely the weaker of the two, still lower on the year and experiencing a significant pullback month to date. I know it's making a nice move higher today, but all in all, a name that has been met with some pretty mass selling in the last couple of weeks.
Yeah, it's been a rather rough road for this one recently here. And you're right, this is a nice breakout today that we're seeing to the upside, and it's taking us above an important technical point here. But let's look at the big picture for the chart first. All in all, it's been kind of a falling wedge type shape here. We have one trend line going across the highs, one going across the lows, pointing in the same direction but converging toward each other here. So we can also see this purple line here, a much more steep trend line heading downward here. And really that's because the price has been trailing off noticeably here. We're down about 32% from our highs right here on June 15th. So, you know, it's been a pretty much just straight down since that point. Now you can see today we're breaking above this purple line here after we found a little bit of support near our lower trend line of our falling wedge type shape here. And, you know, we're up, what is it, more than 5% on the day here. So it's a nice breakout to the upside here. But we still haven't crossed over any real other important levels or any key technical points here yet. We've still got a ways to go before we reach anything else noteworthy here. I didn't bother including our two longer term rather exponential moving averages. I just have our yellow 21-day here because the downward move has outpaced them so severely they weren't really very relevant anymore. Instead, I chose to include standard deviation channels, and what we do is we take our linear regression line here, a line of best fit based on closing prices, that's our blue line, and then we extrapolate standard deviations above and below that point. Right now we're finding ourselves between -1 and -2 standard deviations, so the price move downward has been rather extreme relative to itself, and that's something that can be worth noting here because extreme prices are usually the harbinger of more extreme prices to come. So looking at our RSI here, we can see that momentum has improved somewhat. For the bulls, at least, we're no longer deeply oversold as we were within the past few days here. We've crossed back above that threshold of 30, so that's at least a little bit of a bright point for the bulls in this name here. For support and resistance, the downside looked kind of more interesting to me here because we're getting pretty close to a confluence of a few different things here. We've got our lower trend line, our short-term steep purple trend line, and our -2 standard deviation channel, all kind of within 24 to 25. So that's a range to watch to the downside here. To the upside, we've got another confluence. We've got our -1 channel, our yellow 21-day EMA, and a point where price bottomed out twice near about 29.50. That's this red dashed line, and that was the bottom for much of the past year that we've been in until we had this breakout to the downside. So between about 29 to 29.50 or so. So that would be the areas probably to be watching for many short-term traders.
All right, 29 to 29.50, just about $2 above where we're currently trading. So hoping for some upside
Let's
here
go
once
double
we do
top.
have this earnings catalyst,
Go
which
back
is
below
just,
that 50% retrace.
Day weight at this point. So now when trading this name, Alex,
We
walk
have
us through what you're
massive
thinking,
candle.
just given the fact that this name was at 52-week lows just last week. We
Big
saw
ol'
some
wick.
major pressure weigh on the
I don't know.
retailers.
Might not happen.
We saw the retail winners and losers really emerge last week. So will Chewy be a winner? Will they be a loser? We'll obviously have to wait and find out. But say you want to take on a more neutral stance, perhaps to be prepared for either direction.
Yeah, tons of volatility in this name. You can cast a pretty wide net over the price, but one of the reasons you may come to a neutral conclusion is if you kind of look back at what we said in the previous segment. you may be watching a situation where the active customer number is a weak one, but they make more per customer, leading to increase in sales. It could ultimately be a report that is seen as somewhat mixed. So I looked at an iron condor, which is a neutral
GNS,
strategy.
back
It's a
up to VWAP.
range-bound strategy
Down
in which you're selling
25%.
credit spreads on both sides of the
GME
market.
at VWAP.
Call spreads to the upside, put spreads to
AMC
the
up
downside,
2%.
creating a plateauing
Barbecue up 3.2
like
hasn't
profile
broken
that has
out
risk
yet.
in
It's
both
looking
directions.
promising
In this
earlier.
particular case, looked at
Maybe like
this
6%
Friday's
on it.
expiration, selling the 30-33 call vertical and the 24.5, 21.5 put vertical. We collect $1 for this whole package. You'll notice it's $3 wide on both sides. So you're risking $200 in both directions to make $100 if it stays between. But this is going to be over a 20% wide window in this stock. As you can see, the break-evens are at 23.50 and at 31. That is a massive, massive range for a stock that is trading below $30 to have a nearly $7.50 wide range on that is quite incredible. And it just goes to show the amount of implied volatility in this name. You can see those white lines and the arrows representing those break-even points. There is risk to the downside. To reach that $200 max loss, you're going to have to be below 21.5 by the end of the week or above 33 on the upside. So again, a massive, massive net cast over the stock, looking for a neutral-like response to this. And the stock today, of course, up $1.40. You'll notice it's just ever so slightly closer on the call side, maybe reflecting some of that strength into this report.
Yeah, I think really well put. Now to shift gears here and look at Amazon, a retailer, but also a name that has its hand in so many different aspects of our overall lives. It's difficult to even put it into one bucket here, but this name's up about 0.75% today. And like Alex pointed out, well, I did highlight the strength we've seen this year. It's up 60%. We're still well off of all-time highs around 188 a share, Rick, of course, on an adjusted basis once we saw shares split, because I still recall the days of Amazon being well over like $2,000. That's no longer the case, but we are seeing some upside today and now some upside for the month. We're just slightly higher month to date, so erasing those recent losses.
Yeah, kind of curious too. We're barely changed over the past 52 weeks. We're only up about 3%, so not a lot of net movement from that time, although we have had a dramatic increase off those yearly lows, like you said, of about 65% or so. And the chart looks rather interesting because we kind of have two competing trend lines right now. We are right on the verge of breaking through one or both of them. We're running out of room in them because they're very close to intersecting here. You can see we've got this long-term upward trend line and a much more short-term trend line starting with those yearly highs near 143.63. We're off about 6.5% from that point, but you can see we've only got a few days left before we would just move sideways through them if nothing else really changed here. Certainly not saying we are going to get a breakout.
That's not the kind of thing that
we can predict with any kind of
just kind of building the horizontal channel here for a bit before maybe
whatever. But we can see that we are simply just running out of room with these drawings here. So upside breakout or downside breakout, that would be probably what you'd want to see if you were more of a directional trader looking for a big move beyond either of those trend lines. It also could happen we just drift sideways, and we're right in the thick of a volume node right there near about the 135 level. So look for price to be drawn either to the upside or the downside here near about maybe 129 or so, or to the upside near 140. These are areas of heavy trading. Traders have shown conviction at these levels. So these are kind of the places where you'd expect price to be drawn to. Now we can see as well that price is above our two longer term moving averages, our purple 250 2-day, our orange 63-day. We're just below our yellow 21-day. We were above it earlier, and it was looking like we might be testing that downward sloping trend line to the upside here, but we've been rejected a little bit. Now we're back below that point. We're just kind of bouncing around it during the past couple trading weeks here. RSI not really giving us much help either in terms of a directional outlook. Kind of just once again bouncing around that midline of 50 here. Very slight bullish lean though, so I guess coupled that with our moving averages, which are trending upward, it would be a little bit more of a bullish lean on this chart here. And in terms of support and resistance, 130 to the downside, that's where we formed a gap right here during our last earnings event. That was about the highs we saw before we gapped up there. So look for the gap to be filled. That's never happened yet. We came fairly close, but we did not actually fill it. Just below that, we've got our 63-day EMA coming in near 129, so that could also be supportive. To the upside, if we do break out, 140.57 right here. That was our best close that we saw recently. That would be a notable move to the upside here, but that's one area that stood out to me as well.
Ryan, we're about 6% off of that recent all-time high, but all I heard was that we see some optimism as far as technicals go. So we will look at a more optimistic example trade, but appreciate the breakdown as always, Rick Ducat, our chart master. So now trading this name, Alex, I heard more bullish lean. I'll take it. Walk us through then a more bullish leaning example strategy.
Yeah, bullish technicals and the ultimate optimist over at Wedbush thinking the mega caps are going to lead the charge. And Amazon in particular called out. So looking at a bullish strategy in Amazon, pretty straightforward here. What we're looking at is buying a debit spread. One strike is in the money, one strike is out of the money, and we're just going out to September. So in this case, Jenny, buying the 132.5, selling the 137.5, $2.50 in the debit on the $5 wide spread is 1/2 the width of the strikes. Find that break even, you simply add that 250 to the 132.5 call, you get to 135. And as we know with these strategies, 1-to-1 risk reward ratio, risk 250 to make 250. Profit to the upside, risk to the downside. Pretty straightforward here, looking for Amazon to rally up through 137.5 over the next 2.5 weeks.
And of course, no near-term earnings catalyst to watch. Unlike Chewy, we already had their earnings, pretty strong post-earnings reaction, but we already have that major catalyst behind us with Amazon, naturally. But also important to keep in mind for both of our example trades today, they do contain multiple legs that can lead to multiple transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risks like unanticipated exercise or assignment. Now, coming up next, we will discuss all things the meeting of the AI minds, as we are seeing Chuck Schumer to host this AI forum with some of the largest names that are right now competing for a seat at the AI table. We'll discuss more what that means for these companies coming up next.
Interesting type of summit or forum, if you will, because we've heard some commentary, especially from Elon Musk, around concerns around training AI models and the data that's going to be utilized to train it. And we are going to see if they are going to provide some framework here for the future when it comes to regulations. Now, what I would say here, Jenny, it's going to be a little bit difficult because technology is always light years away from regulations, and the cat might be out of the bag when it comes to AI, but at least this is a start, and this could have, I would say, a little bit of a minimal impact in the near term when it comes to a lot of these technology companies, but we may see something develop over time here in the next year or 2 years where we have a little bit more of a structure when it comes to artificial intelligence, and maybe having some of these items like having watermarks on certain articles or papers that are written by AI, as well as some of these other things to be able to protect people's data, as well as protecting people's patents and intellectual property and things of that nature, which is another issue that we are seeing actually within the writer strike that we are seeing in Hollywood here. So a lot of topics that will probably be discussed, but I would not see any type of immediate impact when it comes to the AI community.
Yeah, I completely agree. I didn't really see this being like a major market event, but I do think just given some of the remarks we've already heard, particularly from Elon Musk, who's been pretty negative regarding the AI impact and the importance of being careful just with the advancement of the intellect, that some of this technology does have the capability of, growing and learning and continuing to evolve. So will be interesting to see remarks from him. And I'm also curious your thoughts. I believe that the NVIDIA CEO was actually, to me, notably absent from this meeting of the minds, I'm calling it. So that's interesting to me because I think AI, I typically think NVIDIA.
Yeah, I mean, it is a little bit interesting. I'm not going to read too much into it. When we're talking about NVIDIA, that's going to be more of the hardware side. Now, definitely they have some exposure when it comes to software and utilizing it for their GPUs that they are delivering. But I think right now they're just trying to get some of these players that are in the space that are really focusing on the software side of the business and how they're going to be able to try to regulate and ensure that nothing bad goes on when it comes to AI. But once again, unfortunately, there's already bad things that are happening with AI. It's going to be very hard to regulate after we have already seen this type of expansion. But I think trying to lay the groundwork for some of the major players in the space is a start to be able to try to figure out how we are going to navigate this space here in the near future.
Yeah, and I do think that framework is important because, you already see it across social media. Like, Meta utilizes this technology already. I think it's a little bit scary, but I also think it's cool. So it's sort of like that influx. We're sort of in the in-between right now. But we will leave it there. Great breakdown, as always. Kevin Green, senior markets correspondent for the network. And I'd like to bring back in Alex, and it's time for FOMO. So we are looking at PDD, previously known as Pinduoduo. Like you said, that's such a fun name to say. PDD just does not quite do it for me, but hey, with a 16.5% move higher on the back of its second quarter earnings, really nice reaction to its results.
No doubt, and honestly, you look at the numbers, as I'm sure you're going to be able to go through for us here, you kind of see why. They're massive. This beat is huge. EPS beat the consensus numbers by almost 50%. Revenue beat by almost over 20%. And it's down the line. It's not one part of the business is, outperforming, leading to this sort of, one-time, one-off beat. This is their whole business, from online marketplace services to transaction services revenue, beating by a wide margin here, leading to this, really, really impressive beat. Adjusted net income beat by 40%. You understand when you look at the numbers why the stock's being rewarded.
You do, and just to break down some of those metrics even further, we did see revenue specifically from their online marketplaces and services rise 50% year over year to $5.2 billion. We also saw revenues from their transactions rise 131% year over year to about $2 billion. They also said that they held just shy of around $25 billion in cash and cash equivalents and generated about $3.2 billion in operating cash flow. One thing that I thought was really honed in on, and I saw it just all across the different headlines regarding this report, is that they said they saw this positive shift in consumer sentiment leading to a rise in demand across various product sectors. They also said that right now they see this then continuing into the back half of this year. This is really interesting because all we've heard from a lot of these Chinese names is that they actually are not seeing the pace of the recovery be quite what they expected. They're still facing some significant restraints. Alibaba's been one that's been just bogged down by some of the regulatory headwinds that have weighed on that company for the better part of the last 3 years. So this was different sentiment. We even heard from, I know different world, but also operating in the same region of the world is NEO with some really disappointing results today and a move to the downside. So this was a rare bright spot, and I think for that reason it's not surprising to see this name outperforming now on a year-to-date basis with today's move higher, which surged it to near 4-month highs. It's up now 15% this year and up now almost 5% this month. So looking quite different. I'm not going to say they're necessarily, crushing it on a year-to-date basis. Their 50 and 200-day simple moving averages are just completely flat as of late. But still, a really nice move to the upside today and some different sentiment we haven't really heard from a lot of these Chinese ADRs, Alex.
Completely agree, but just to hammer home the point, I think, of emphasizing how big of a beat this really was. We're always, citing things on a year-over-year basis or relative to consensus estimates and sort of that general street feeling. But there's range to get to that consensus estimate, right? Like, for example, looking at kind of like the numbers that Bloomberg has here, the low estimate for EPS, for example, was 540. The high estimate was 823. That led to a consensus estimate on Bloomberg's side of 713. This came in at 1047. So it beat the highest watermark in terms of the street estimate by 25%.
It's a big break on the SPY.
And this is just down the line. The highest estimates across the board were just, hit out of the park here, nowhere near where this actually came in. And so it just goes to show, even the most optimistic of analysts that are looking at this, the PDD numbers are stronger than even they saw coming. So really impressive report. I was really surprised to see just how many analysts in general do have ratings and price targets on this stock. 51 of 55 analysts have a buy rating. The other 4 all in the hold camp.
This is crazy.
Yeah, and that's surprising to me too, to also see that relatively strong conviction from the street analysts that cover this name.
Yeah, it's already 130.
Point, I mean, just
I don't think we're seeing 444 today.
They blew past those expectations. We saw their adjusted earnings or adjusted ADS per share come in 42.5% above what the street had been expecting on sales that also beat by almost 20%. So not even close to what the street had been expecting. I mean, that's really phenomenal to me as well, like you said. Now, when looking at the performance of these names, and I sort of do group them all together, although I know that PDD does operate in its own realm in China. They're up about 15.5% this year. Alibaba is up on the year. It's up about 6%. The surprising winner, though, is Baidu, which is up almost 24% on the year. I have to think that the mention and the push into AI, as they do have their own ERNIE bot, it's been rolling out quite slowly, but they are still at least pushing into AI and quite vocal about it. And then we have JD.com, which is down significantly on the year. So PDD definitely emerging in the upper echelon in terms of performance on a year-to-date basis of these Chinese names that have been hit with, weak import-export figures. We also saw the fact that they are cutting rates and second time in 3 months, which was unexpected. Chinese names have been dealt a difficult hand in the last couple of weeks, so it's amazing to me to see this name now up 5% for the month.
You just bought calls?
That's limiting too, because they've been dealt a tougher hand.
When are you gonna sell those?
Years. These stocks have underperformed, but really, what you're getting at is this stock wasn't a strong performer.
Oh, you never
today.
got puts.
Today changed
you did get
narrative.
puts.
It's up, what is almost 17% today.
But you never closed them,
and
did you?
for the year, it's not even up 15% or around 15%. So it's basically had its year today. And that really changes, I think, the sentiment around this stock, Jenny. So from a trading illustration standpoint, the FOMO feeling, I think, is clearly now shifted into the camp of the bulls. And so I looked at a bullish trade example. And what I'm looking at here is a debit spread, kind of going back to the well, or a very comparable strategy to what we looked at in Amazon. However, to get more strike selection availability in particular, I went to a weekly expiration. And so went out a week further than what we did in Amazon. I went to the September 22nd expiration, and this allowed single dollar wide strike availability for option traders there, and it allowed us to be a little bit more nimble in that strike selection. What I went to is the 92.97 call vertical, creating a very comparable risk profile to the strategy we looked at in Amazon, but of course now looking at PDD. Extra week worth of time, but $5 wide spread for a 250 debit. It is a very comparable strategy, and the risk profile is going to look identical, just with different prices because we're looking at a different stock. It's pretty straightforward. You're looking for continued upside in a name like this if you deploy this type of a strategy, and you're taking risks to the downside. So with the big move here in PDD, up near 90, actually almost 94 and a half here, 94.25. The break even is at 94 and a half. So you simply add that 250 to the 92, and you get to that mark. So really close to our break even. We know that that's sort of a loose guideline for us with these strategies, and then equal risk to reward on these speculative directional plays. Risk is all to the downside. Stock would need to be below 92 going out 3.5 weeks from now.
This is the way.
I think pretty straightforward. The logic kind of speaks for itself in terms of the FOMO feeling being to the upside here today, Jenny. Blowout earnings quarter, stock making its year, at least thus far, in one day.
Yeah, nice to see that this near 17% move now has helped, because a lot of these names, like JD, Baidu, for example, they reported strong earnings. We saw a nice lift pre-market, and then it sort of dissipated as the session went on. So this 17% move is one I'd say that is clearly important and significant, and holding on, of course, another up day for the overall market. But we'll leave it there for this segment. Now, coming up next, we will look at another name that is making a monster move to the upside today. That is Big Lots, which is surging 30% on some really strong third and fourth quarter guidance. We'll discuss that more with Renita Young coming up next.
Other RSI divergence. 1, 2, 3, 4. I declare a thumb war.
So Renita, walk us through what we're seeing, what's leading to this massive move to the upside. Because as we know in retail, it takes a lot to see a nice earnings move hold here.
It does, and I'm glad that you injected a little sobriety in there. Even though it's a massive move, it is still trading under $9 a share. However, the company posted better than expected results for the latest quarterly earnings, where we saw losses come in narrower than expected, and the company beat revenue expectations, gave strong guidance going forward for the third and fourth quarters, and it was all a testament to the company's turnaround plans, showing that they're working. Revenue was $1.14 billion above expectations, and adjusted losses were at $3.24 a share, far better than the expectation for a loss of $4.15 a share. But comp sales decreased by nearly 15% year over year. However, inventories were down 15% year over year at the end of the quarter to $983 million. Now, that was driven by the lower in-transit inventory and then on-hand units, also the drop in the average cost of a unit. Gross margins expanded during the quarter, and the company said that it significantly strengthened its balance sheet by closing the $294 million sale and leaseback deal on August 25th. That included the company's distribution center in California and then 26 of its own store locations that it now is leasing back. The proceeds, however, were not included in the company's quarter-end liquidity statement of about $258 million, but the company did expect or post the expectations for pretty strong earnings moving forward into the third and fourth quarters.
Yeah, this seems to be a story of better than expected, but still struggling quite significantly, and maybe in a little bit of a short squeeze situation here. I'm seeing about 23% short interest on this one. But any final thoughts here on Big Lots, Renita, before we say goodbye?
Watch this closely, because much like Five Below, dollar store chains, this stock is expected to do well in a downturn. But we've been seeing that line of delineation between those who actually do well and those that were expected but fell short of the expectation.
Yeah, and Renita, I think that's a really good point. Of course, we do still have some of these bargain or discount retailers reporting this week. I believe Dollar General and its Ollie's Bargain Outlet are reporting still on Thursday. So we still have retailers to keep on our radar, and at least based on this move today, perhaps seeing some further upside in some of these names that have seen somewhat of a lackluster year. We appreciate all the breakdown, though, on Big Lots with a 30% move higher. Renita Young, Senior Markets Correspondent here for the network. Now, coming up next, it's time for Under 30. We are looking at NEO, not seeing the same degree of love today as Big Lots shares are down 4% after its second quarter results were not enough to excite investors. We'll discuss more with George Tillis coming up next.
investors because it looks like to me, based on the missed sales numbers alone, they've had some delivery challenges. And we talked about XPEV as the same kind of situation where deliveries were down year over year, at least for the first couple of quarters of the year. But the guidance actually for the next quarter and going forward for the second half of 23 is much improved. And so lastly, I'll say this. We talked about, the aspects of technicals as well. If you look at the 10-week moving average for XPEV, or XPENG, if you will, XPEV stock, we talked about that 10-week moving average as support. One of the things about NIO is it's actually broken below that 10-week moving average. So that doesn't bode well, at least for some near-term momentum.
George, when you look at this seems to be a situation where the stock is starting to take a step backwards. It's not taking a series of steps forward like we've seen many of its peers, notably Tesla, almost seemingly never take a step backwards throughout its history. This was sort of that first real name in a public space that was presented to us as a new kind of threat to Tesla, or maybe even, hey, this is your chance if you miss Tesla, look over here. This is a very similar company. That's kind of how it was positioned. I remember when it first came public. It's been public for several years now. But I'm looking at a situation where, you talked about the sequential declines, but we know that there's some nuance to the time of the year in terms of which seasons are maybe getting more sales. So just comparing to the year prior, I mean, a 6% decline in vehicles sold, Tesla didn't have a lot of those type of hiccups in its history. It's typically always been, pedal to the floor in growth. But not only is it not growing now, or at least it hasn't this quarter, it's actually a less efficient business. I'm looking at a company that was in the 13-14% gross margin range, is down at 1%, which is way below the expectation. I mean, they're going the wrong way. It's seemingly everywhere, George.
Yeah, and that's a good point to bring up. I mean, look, so if you think about Tesla, what they did is they did a phenomenal job in actually lowering prices. And the reason they can do that is they're going to make up for the difference in higher volume growth. If you just look at the run rate estimated by the midpoint for Q3's deliveries, I'm just going to throw out around 200 to 220,000 units. Tesla is expected to produce about 1.8 to 2 million units this year. So it's about 10 times the size Tesla is of NIO in terms of deliveries. But at the same time, one of the things about Tesla is its top line sales have been improving as average selling prices have gone down. That's not been the case for NIO. Average selling prices are down and total revenue is down. That's a twofold variable, or two variables that are going against you. And that's going to trickle down to margins, and that's why gross margins are severely depressed. Even in the last year, with this quarter being a very low gross margin print, is about 6.5% compared to averages of about 16%. So that's not good. And from an operational metric standpoint, last year the company, including the quarter they just reported, lost about $2.3 billion in operating income on about $7.3 billion in sales. So it's in financial strain. It's not in trouble. It's not in a terminal decline, but it's in a strain right now. And I think that's indicative of the technicals as well, because like I said, the market seems to agree with that because it's broken below its 10-week moving average, whereas Li Auto, out of the three Chinese automakers, has phenomenal growth, and I think that's why it's outperformed even Tesla.
Yeah, and George, even its 200-day moving average right now is sort of starting to dwindle off, losing some overall steam here. So that weakness you speak to, I mean, it's down 31% now this month, and obviously today's move lower, not aiding sentiment here, as we did see this earnings catalyst that was not enough to excite investors. But we will leave it there.
Some red
really
candles.
Great breakdown on some of the disparity we are seeing in the overall Chinese EV space.
See if it actually comes down.
Lower on the session by about 4.5%. That also does it for Alex and myself for Next Gen Investing for this Tuesday. Coming up next, we have the watch list with Nicole.
I forgot this morning. Choppy days are followed by continuation days, followed by choppy days. It almost goes back and forth like that consistently. Yesterday we were just range bound. Resistances stuck, support stuck. Remember, roller coaster, just boom, 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 easy trades. I remember saying yesterday, tomorrow could be a continuation day since today was a range chop day. Sure enough, continuation day, big continuation days. These days you can probably make a lot more. So nice if you're set up well for these days. But we'll see. Tomorrow might be a chop. Doesn't have to be perfectly chopped like it was yesterday, where it was just up and down, but more range bound and not as much of a continuation. I'm still not wanting to break out to the downside. That's not it. Not yet. By the time it does, it'll probably be right to VWAP. So, hey, we broke. Oh, but here's VWAP. Sorry. Sorry. Got GME to come below VWAP. Up on 2 o'clock. Not having enough buying power is struggle again. I could have got losses there and reloaded, but if I have nothing to reload with, I just want to hold my losses and hold those contracts for later. Urging me to hold and hope. Bueno. AAOI up 12%. Casual 820 on its lows.
they have been denied the ability to move their application of the Grayscale Bitcoin Trust into an ETF. Well, they appealed. They were denied by the SEC. They appealed to a DC Circuit Court of Appeals and won today. So you can see what's happening to a lot of the cryptocurrencies, as this is another way of validating cryptocurrencies. If you can trade an ETF on cryptos, that is another level of validity for Bitcoin and other cryptocurrencies, Nicole. It's a big victory for Grayscale and cryptocurrencies in general. You see Bitcoin as of right now up 7.6% on that news. Very bullish news for the legitimacy of Bitcoin across the board, Nicole.
Yeah, GBTC right now up 16%. And as you noted, Coinbase up 15%. It's unbelievable. And the question is whether or not these other names will now appeal, right? You have several others. You had BlackRock and Invesco. I think there were at least 8 or 9 that were going for these kinds of ETFs. So it'll be interesting to see what kind of appeals come through from some of those other names. So holding on to my seat here with that. In the meantime, you're watching Best Buy, one of the big gainers on the S&P 500 after its earnings.
Yeah, really upbeat story out of Best Buy, not necessarily in terms of sale numbers, as sales were down, but they beat on earnings, they beat on revenue, and what's got the stock up about 5% today is the theory from Bitcoin or from Best Buy that the low in tech spending has hit, and we're in the lows right now. So any promise for the future, think about it, Nicole. If you buy a computer, like everyone did when the pandemic started and COVID started, about 3 years is when you look to replace that. They say that every 1.5 to 2 years, the strength of a computer or a phone double. So that could be, we're right in that window where you could see an upturn in activities for Best Buy. But think about Best Buy. This is such a well-run company. They control their headcount. They control expenses. They continue to be profitable in a tough environment for overall electronics. So I think this is a message that Best Buy is setting to the street that the lows are in. The overall cyclical environment of electronics is starting to swing back up. Really good news for a computer and electronic retailer like Best Buy, Nicole.
Right. Well, we'll have to wait and see. And I want to see what the holidays will bring for names like Best Buy. And we already had Bath and Body Works. Time to upgrade. They were hiring. So we will see which names start hiring, where the foot traffic and spending goes. Kevin Hinks, thank you. Okay, so it's Tuesday. It means Technical Tuesday. Kevin Horner's with us, Senior Manager, Trading Services Education at Charles Schwab. To talk about, first off, let's look at the S&P 500. Obviously, it's a winning couple of days, tacking on to last week's gains. What levels are you watching?
Well, honestly, today I was watching and keeping an eye on that 44.65 level to the upside, and we blew right through it today. So here we are at 44.88 nearly. The candle today looking fantastic, recapturing the 20 and 50-day moving averages simultaneously. The only negative is the 20-day moving average crossing below the 50-day to the downside. So at least in the immediate future, the question becomes, 1, do we hold today's breakout? 2, do we get a second or even a third day holding the 50-day moving average after this move? So as great a move as we get today, I do think the importance of the next 2 days cannot be overstated. Let's make sure that we maintain the 50-day. We do not want to get thrown right back below it. That would be a pretty negative reversal indication. So just some continuation is really what we're looking for out of this spike that we're getting today.
All right, so we'll watch for that.
Agreed.
44.65. I had
this changes a lot.
in my notebook as well. And as you noted, we moved above that. Right now we're at a level of 44.87, so we'll watch these trends. In the meantime, you're watching Datadog. What stands out on this name to you?
Well, I try to bring charts that are interesting, and we had a pretty negative drawdown here with the earnings in second quarter back on August 8th. The thing made a strong sell-off. We had been hanging out in that upper range, 105 to 115, and then we made a big new low all the way down to 84. So we had a real solid 30-point rejection. Now, the rally that's been going on for the last 2.5, 3 weeks since that earnings announcement has just been light in terms of the bounce back. And it's notable that we are running ourselves with today's action right into the 20-day moving average. It's actually the second test of the 20-day. We go back to last week after NVIDIA reported. Datadog had a fantastic open, but it was right at the 20-day. So it presented as a reversal candle. Now we've managed to hold those recent lows on Datadog, but at the same time, today's high running into the 20-day certainly bears watching. And so I would encourage traders to keep an eye on the 20-day moving average on DDOG. A close above it today would be great. If you can get any action that takes out the prior high from last week, that would be around 97.35. That becomes an interesting opportunity. But at least in the short run, I think bullish traders are probably a little bit disappointed with the fact that it's rallied, but it hasn't really shown any strength, and we haven't made what they need from it, which is a higher high in the short run here. Lots of higher lows coming off that recent bottom, but I think it bears plenty of watching now.
Okay, and we will. I mean, it had that big gap down on August. It looks like the August 8th when it sold off on the earnings, and then has been making its way back, and cybersecurity names seem to be somewhat popular, but certainly a group to watch. Sure. That being said, let's talk about HubSpot. And Hubs is the ticker. And similar story, hit 581, had the earnings, and then had the gap down. What are you thinking here?
Yep. Very similar situation. Today's candle, once more, a beautiful one. The biggest difference here is that instead of the 20-day moving average acting as resistance here, it's the 50-day moving average. So it is kind of interesting that the 525 level above has been pretty important. The 50-day moving average comes in around 525. Today's high intraday to this point has been 523.5. And we've been to this level a few times here in the last 2 to 3 weeks. Each has presented an opportunity to take a little bit off because it's been retreating from this level. So are we, maybe we're in the midst of this gap move after the earnings from August 2nd.
I'll trade for the Theta Farm members. Open up another position.
If you're a trend trader, what are you looking for? You're looking for the stock to recapture the 50-day, and it hasn't
back up
quite
there a little bit.
done that. So I think shorter-term traders, at this point, you may as well allow the 50-day to be recaptured so you can start to position yourself properly, just simply because this represents an area of resistance. It's been rejected up here a number of times. So whatever that rule of thumb is that the given trader is considering, do they want to see 2 or 3 closes above the 50-day to validate the breakout, or do they want to see maybe just a price move through the last high on a close? Whatever it is, whatever their preferred rule of thumb is, wait for some semblance of confirmation. That should give you reason to get back into the position or to add to already a winning trade. As usual, Nicole, it all comes down to time frame. So, a trader who picked this up back at the beginning of the year is at the highs today, or earlier in the month, they were up 100+%. So even still, there's likelihood that traders in here are sitting on significant profits. And so it probably becomes a scenario to make sure you're managing those profits, looking at areas where you would look to take profits and move on any portion of the trade. Everybody that views this segment frequently knows I'm a fan of piecing out of the position simply as a way to manage your emotional tie to the trade. I think it goes a long way towards aiding traders who are willing to sell a little as things are going well.
Yeah, there's no emotions in trading. It's just like there's no crying in baseball. Not allowed.
Sure.
All right, Kevin Horner, thank you so
Thanks,
much.
Nicole.
Kevin Horner, Charles Schwab, thank you. All right, up next. Our next guest believes that the leading indicators predicts the markets. We'll talk about why we may be watching for a recession coming up.
Okay, send out another alert to the theta farm. The closing position. Long explanation. GME's come down. Spies still sitting on that head and shoulders. Head, shoulder, shoulder. Forming this horizontal channel. I'm just looking to break that 447.58 level. Maybe a move to VWAP. VWAP, VWAP. Is up 10%. All this selling off, and then just one nice green day, and you take it all back.
the markets. We've got the interest rate environment, we've got inflation, we've got what the Fed's doing about it, corporate earnings, and then geopolitical events. I'm actually seeing warning signs in all 5 of these.
Right.
So this is a time that we want to actually be a little bit more cautionary in our approach to things. You know, buy low, sell high. And so this is a nice time to be taking some earnings and profits off the table. So where do we go? I look at assets in 3 different categories: cash assets, protected assets, and risk return assets. So we need a certain amount in cash. And by the way, if we're at the top of a market cycle, cash isn't a bad place to be, especially if you can get paid 5% on 6-month commitments of money, or somewhere around 4.
Guts won't get you paid.
Next is protected assets. Big warning though in this way, and that is do not load up in bonds. There are 5 different ways that bonds can lose money, and I'm concerned that literally all 5 of those ways are actually on the table right now. If we have corporations that have
it is bouncing
impacts
up above
on their bottom line,
resistance
Chapter 11 show up because of bank challenges, more difficulty getting funds, the cost of capital's increased. We could see big issues with that. So in my opinion, there's never been a better time to own something called a growth-oriented fixed index annuity. And what it does is it gives you hedging power, as in none of the downside of the market, but reasonable rates of return on the upside of it. So these can be really good tools to be able to allocate in there. And then on the risk return side of things, you know, of course we're going to be looking at stocks.
Yeah, this right on the 5-minute here on the SPY.
Opportunities in this market to be making money. We need to be understanding
slowly
where are some
rolling
of those
over.
Places. One place that I think, Nicole, that people should be paying attention to are metal miners. See, gold right now is in a 12-year cup and handle position right now, if you look at the monthly charts. And so if it breaks above 2100, that would be the confirmation moment, and it'll go to 25 after that. But these metal miners are, if you look at their CAPE ratios relative to the S&P 500, completely different story. They're way undervalued. So I think that there's a great play in that. I think gold and silver are really important, but silver would be my lean above gold personally. And so Skip, a couple thoughts on that.
Yeah, no, I understand. And so, I mean, you look at precious metals, metals and miners overall, as you said, the CAPE ratio that you look at that gives you an indication of the next decade sets a different picture than, for example, the S&P 500.
Right.
In the meantime, I mean, we're already seeing some, you know, volatility, I'd say, in bonds because, you know, they've been moving higher, they pulled back, and then just recently you saw, you know, the long end moving higher, the 2-year was pushing 2-month highs. So if someone, obviously people are going to invest in fixed income, it's paying. Why not? What would be, you gave a warning on investing in bonds, but you didn't give a recommendation on what might work or not work, either short-term or long-term for investors.
Okay, so a couple things. Number one, so here's the 5 things the ways that bonds can lose money. We've got, when interest rates rise, it's the seesaw effect. So that's why banks are having such challenges right now. They committed all this capital to long-term treasuries that were at like 0.5%, 1%, and then now we're looking at, you know, significantly higher. So we lose when those rates rise. The next is net present value. So the fees that we're paying relative to inflation that's going on and what we can get for those fixed assets. So if you can get 4, but inflation's at 4, and then you've got a fee of 1, well, you're losing 1. All right, so that's a way that we can lose money. Supply and demand factors. You know, when the sellers want to sell more and the buyers want to buy, that's a way that bonds can lose money. If we go from credit worthy to less credit worthy, as we've been seeing some downgrades here recently, big expenses on that thing.
Right about that.
And then, of course, the ultimate one is defaults. And you can look at Lehman, Bear Stearns. These were the definition of safe places to be in the 2008 timeframe, and they lost big time. So where do we go? U.S. Treasury is obviously the best place to go for short-term commitments and for capital commitments.
I test on that right shoulder.
Way better than a bank that limits you at 250,000 FDIC. And of course, that's a lot of pressure on those banks because they can't compete with that nearly as well. But again, on the protected side of things, I think alternatives can be really important for us to be looking into. And some of those growth-oriented products that I was mentioning,
I get the move down until
are my particular favorite right now, just given the math and science behind them.
Right, and you are worried about a recession. And how deep, how long, I mean, what do you think will happen? What are some of your, I know you have a base case and maybe a bearish case.
Yeah, I do. You know, and a lot of what we've been analyzing here is kind of pointing towards the more negative case, and I do realize I'm more of an outlier in this way. I'm just trying to tell the facts of what's actually happening. And so, you know, recessions come and go. but global recessions, very rare. So we're looking at global recession right now. We're also looking at a financial crisis in banks. We're just in the first 5 months of that, because it began in March. You know, it took us 13 and a half months to get through the whole financial crisis this last time. So I think that there's more that's developing right now, and so this then gets us to a more of a rolling recession. And I think that because of the cost of capital and how that's flipped so significantly with the Fed's movement here, and we're going to be higher for longer, guess what? Capital markets affect everything. If we can't get credit, we need credit. If it's more expensive, that's margin compression on these corporations. That's going to show up in a very significant way. So as we're looking right now in September, historically the worst month for stock markets, as we're looking at the new college debt thing going back on, and new payments, and of course, you know, a lot of people manage their money like the U.S. government. We don't actually budget. We ultimately just, you know, hope that there's enough that's coming in, and that's not really a great recipe for success.
And we've seen a lot of buy now, pay later.
Right.
And credit cards that have upwards of 20% for the rate, and the more and more you put on there, we have over $1 trillion in debt, as you know, for credit cards themselves, and people are digging in. So that's the part that's scary. For the parts you mentioned, cash.
Sure.
You know, what kind of, you know, there's sometimes when people come on and say, oh, we're 50% cash, we're 10% cash, we're 20% cash, and I know you can put in money market funds, but where do you think people are sitting in cash these days, or what kind of trends are you seeing?
I mean, it really depends. You know, there's this, the people that want to beat inflation, they're all in and they have very little cash. There's people that are just very worried about recession and contraction, and so they're sitting heavier positions in cash. Now, the difficult thing is knowing when to deploy. And so if we know when to deploy, you know, that's the $1 million question right there. So it's difficult to answer that question right now, but I could say it this way. Many people that my firm serves are 65 and older. And so as we get closer to retirement, or we get into retirement, we need more stability, because we don't have the time needed to recover from some of those financial injuries that can come from these market crashes. So.
Okay, thank you for all of that. David Straszewski, Sound Planning Group. Great to have you on.
Appreciate you.
Glad you were here. Thank you, David. Coming up next, we want to talk about how you can expect to pay a little more at the pump. Labor Day weekend is upon us. Gas Buddy's head of petroleum analysis joins us next.
Two minutes to 2:30. That's SPY rolling over. Coinbase up 15%. eBet consolidating up 43%. Big Lots up 27%. Got GME up 3.5%. Brad's up 6. Barbecue's up 3 at VWAP. MC down up 0.5%. Mullen down 1%. GNS down 25. Just below VWAP. Didn't quite fill the gap. Buy up 1.25 still. 448.25. VWAP's at 446.43. And we are at us stream. We're at 20 likes on the day. Thank you guys for your support. Never too late to thumbs up. 3 seconds to 2:30.
Level since March.
This was the same week that we had Hurricane Katrina come in. I mean, it's hurricane season almost. So that's problematic, isn't it? I know you're looking at Idalia right now, and that is certainly the one that's front and center, but there could be more, right? I mean, what is the likelihood?
Yeah, exactly right. I mean, we are entering the prime of hurricane season, which is going to go for another 2 to 3 weeks. And you know, though Idalia is maybe the attention getter right now, there are other areas of disturbances to watch. And of course, the Gulf is certainly a very active area, record-setting ocean temperatures. You know, we are not out of the woods when it comes to impacts from hurricanes. This is just the start. And so that is going to be the wild card in the next few weeks, and it could impact prices down the road. But for now, motorists greeted with a little bit of a decline in the national average, but not every state seeing the decline. The West Coast is broadly seeing increases. There have been some refinery kinks in recent weeks. California, Washington, Oregon, Nevada, Arizona, all states seeing prices go up, whereas areas east of the Rockies are seeing modest improvements. And as a result of Hurricane Idalia, some issues in Florida for those folks evacuating. We are starting to see some stations running behind on being able to refill their storage tanks. So some challenges for those in Florida trying to get out of the way.
Where do we think about some of the other things that come into play? I mean, when you look, there's a lot of EVs now, how people are traveling this holiday. Are they, you know, taking trains, planes, and automobiles? I mean, what kind of expectations are we looking as far as EV growth, or, you know, what people are doing near term and longer term for those trends?
Well, with about 8% of new vehicle registrations now belonging to EVs, the transition to EVs is certainly accelerating. But, you know, with the broadly speaking, so many vehicles out there still internal combustion, we're expecting gasoline demand over Labor Day to be the second highest week of the year, rivaling July 4. We're anticipating gasoline consumption of 9.2 million barrels a day. That's still a bit weaker than last year. Part of the transition to EVs has accelerated. Last year's record-setting prices certainly put us on a faster path to making the transition to EVs. Certainly more Americans have EVs this year than last year, but it's still just a very small percentage of overall vehicles on the road. Many Americans also going to fly. Airlines have been trying to hold the line on fares. Jet fuel prices up significantly from last year. You're going to see a very busy Labor Day, whether you're on the road or in the skies, potentially record-setting jet fuel consumption with a lot of seats being filled. I don't expect the highways, the nation's thoroughfares, to be as busy as last year, but I think a lot of Americans have maybe changed the way they're traveling this holiday season or this summer. A lot of them still traveling via airlines.
Interesting. So, you expect it to be 375, which year over year is relatively flat, maybe a fewer drivers for the labor holiday. I mean, you did talk about where oil went and the spike that we saw as in, late July and August, Saudi Arabia, Russia cutting production. There's also a look to China and the lack of growth that people had anticipated. Oil is back to $81 today. Is there a big picture takeaway on that front when you look at the global picture?
Yeah, absolutely, Nicole. When you back up and look at some of these macro factors, China is certainly still one of the areas that's putting downward pressure on the price of crude oil. China's economy really faltering. Everyone expected them to be certainly much more growth oriented this year than what we're seeing. And as you mentioned, still the production cuts from OPEC making an impact on why energy prices, why oil prices are elevated. That's certainly going to weigh on markets. And keep in mind, OPEC's monthly meetings, they still could shift course in the months ahead. That could prevent consumers from seeing as much relief at the gas pump. And there's still the likelihood that moving into the fall, as refineries start doing maintenance, there could be issues on the refined product side of things, especially with diesel. Diesel prices now starting to be conversational again in earnings reports. A lot of retailers, as they move to fill up inventories ahead of the holidays, are contending with the price of diesel now at its highest level since March. And unfortunately, I think diesel will continue to rally.
Well, looks like it wants to make a new high.
Probably going to remain under some pressure under the threat of continued OPEC cuts, or I should say continued production cuts potentially as Saudi Arabia extends its 1 million barrel per day production cut into the month of October. So certainly a wild card we have to keep watching.
Yeah, and I know there's things to do to save gas. I mean, you know, if you drive steady and don't change around, or you don't have a big wind resistance or things like that. But I actually saw if you have the right motor oil in your car, that could make a difference on the gasoline that you save on the trip, and maybe, you know, shorter drives too. Patrick Dahan.
Yeah, absolutely.
Thank you so much. Yeah, tell me.
My pleasure. Well, hey, I think you had it right on. Any way to reduce friction, Nicole, is a great way to save on your expenses for filling your tank.
Thanks so much, Patrick Dahan, Gas Buddy.
Thanks,
great
Nicole.
to see you. Still in the second half of our show, ACOM Capital joining us. The CEO will tell us how his company is taking advantage of the chip boom. We head to break. Take a look at winners and losers in the S&P 500.
Maybe a double top, maybe we'll just break out. Continuation day turned into consolidation day. Been sitting here for, what, 4 hours? 3 hours. Climbing, new high of the day on SPY. Congratulations, up 1.35. A lot of exuberance before piece. Up jolts. Tomorrow we've got ADP employment and GDP revision. Retail inventories, trade balance of goods, wholesale inventories, and then pending home sales. So a lot of data tomorrow, so we could reverse all this move tomorrow. That's a huge daily candle. I don't think I'm gonna close the. I don't think I'm gonna close the SPY bets. I'm not gonna try and time it that much. We might chop around, might slowly climb back to all-time highs. but I think I'll still have plenty of window. At the top, was that the final RSI divergence? Maybe not.
Joining me right now with a market update, Ben Lichtenstein, Senior Futures
Lichtenstein.
Contributor. What are you watching? Look, we have 90 minutes left in the trading day. What are you thinking here?
Yeah, I'm really keeping an eye on the strength we're seeing here today, Nicole. Green arrows across the board and how the move up. We've actually taken out some key levels that traders should be aware of. Let's begin first and foremost with the SPX, the NASDAQ, the Dow, and the Russell. As you pointed to, all four of the major indices enjoying gains. Green arrows across the board, led by the tech-heavy index, which is up around 2%. And just to point out some levels that we've been able to reach, the SPX above 4490, nearing 4500. You had the NASDAQ up and through 15,350. I did see the Dow to within 200 points of 35K, basically 800 points off the lows that we saw just Friday. An impressive move up, to say the least. And you've got the Russell, which is nearing 1900. Now, Nicole, I also noticed that 3 of the 4 major indices are now back above or testing or back above their 50-day moving average. So impressive, to say the least. Now, the S&Ps, shifting gears to the futures, have managed to take out the highs from last week. They were up around about 44.90, and we're seeing a convincing move again up and through that key level, as I mentioned. Now, we're still holding near to the middle or lower extreme of the range that we established last month, right? So still somewhat contained, holding off that high that we saw last year up around, or I should say for the year, up around 46.34. So again, significantly off the lows that we saw this month, but still well off those highs that we saw last month, the year high prints here. But I think this comes after jolts. The numbers that we saw this morning in terms of consumer confidence, all very appeasing for investors and traders, and also a nice move here in terms of rates in the U.S. dollar, Nicole, which has been very supportive of this run up here. Again, in all 4 of the major indices enjoying gains. Here you can see the S&Ps up, well, as we're currently trading here, by 1 1/3%.
And I thought it was interesting, too, when I look at the whole market, to have a name like Best Buy tripling down on the call for the bottom in the tech demand and just seeing better things ahead. I thought there's a lot of interesting moving parts here today, a lot of which you just covered for us. Thank you so much, Ben Lichtenstein. Good to see you. Appreciate it. All right, let's turn our attention over to real estate. In fact, infrastructure and industrial real estate.
Wonder if Smile will have a high close today.
With us, CEO of Acom
crazy.
Capital, joining me right now. So, where do we stand here in this world of yours? Tell us a little more about the current environment.
Traders. Yeah, great to be here, Nicole. Good to see you. I think the current environment for industrial in particular right now, you've got a lot of wind at your back as it relates primarily to
GNS back to VWAP.
Some of the recent legislation that's boosted a lot of the large capital expenditures for the advanced manufacturers. So if you think about it, if you think about chips, if you think about EV, if you think about batteries, all of that investment, CHIPS Act, if we take it as an example, has created new plants which have new supply chains, which need more industrial space to utilize for their supply chains. And so we're seeing a real benefit associated with that, certainly on the chip side. I think another place where we see a lot of interesting opportunity is the shift from West Coast ports to East Coast ports and the benefit we're seeing in those Sunbelt states as it relates to industrial.
West Coast ports to East Coast ports. Is there any way to quantify how prevalent that is?
Yeah, so if you think about it pre-pandemic, it was roughly 60-40 in terms of the amount of containers going from going into West Coast ports and East Coast ports respectively. Post-pandemic and today, that's shifted closer to 50-50. And so what that means is all that capacity and all that port capacity that's coming into the East Coast as a result of both supply chain diversification, expansion of the Panama Canal, what that's done is that's created a real market for industrial real estate in those Southeast markets. So if you look at Houston, if you look at Savannah, you've seen almost 30, 40, 50% growth in the port traffic in those markets. And as a result of that, for us, from the real estate perspective, we see a lot of need for industrial space.
So how are you investing in this large space that is much needed? I mean, because we talk about the different kinds of real estate, and some seem to be doing better than others, and this makes sense. If you're going to need to have more factories or more supply for some of the things that are growing, chips and AI and EVs and things like that, how do you get involved? I mean, what is AECOM doing these days to increase their presence and footprint for this type of real estate?
Yeah, it's a great question. So our focus is primarily on development, just given our background in a large infrastructure construction company. But from the investment perspective, where we invest third-party capital out of, we focus on sheds and beds. And industrial is the sheds component of it, beds being the multifamily side of things. And so when we think about industrial, we're really looking at markets where we see that supply growth. E-commerce obviously is a big factor. I think a really interesting stat is for every $1 billion of growth in e-commerce year over year, you need about 1 million square feet of new industrial storage space.
GNS
and
trying
so
to break through
where we
VWAP.
see that benefit is coming in markets which have had less supply growth over time, are benefiting from sort of these advanced manufacturing plants, as well as the shift in the port traffic. So an example of a project that we recently invested in that we're a little more than 50% finished in construction is a large series of industrial spaces in Mesa, Arizona. Mesa put, again, a lot of incentives in place to build that industrial capacity on the real estate side. And as a result of that, it's been a real great opportunity for us to develop new industrial space in a market that's growing significantly as a result of all of the investment that's going on in Phoenix as it relates to the CHIPS Act.
15 minutes to power hour.
So are you under the umbrella when we look at AECOM and we're seeing some of these contracts? Where does that fall in?
Eating snacks, Nicole. You're on the
we're
air.
a subsidiary of AECOM. We are independent in the sense that we manage third-party capital, but we get the benefit of the overall corporate umbrella in the sense of information, the ability to underwrite projects from a development perspective, as well as understanding some of the capital flows moving towards many of these locations which are benefiting from all of this recent legislation.
And when you're doing your investing in real estate, are you betting that rates are going a certain way, or do you invest regardless, knowing that there may be fluctuations?
Yeah, listen, rates absolutely have an impact. I think from a construction perspective, when we go out and get construction loans, the impact of rates is less so because of the amount of time outstanding that a construction loan is outstanding for. And so while rate increases have decreased our returns a little bit, from our perspective, we build, stabilize, and sell it. And so it's really the next buyer analysis. How is the next buyer going to finance this project? And so that's led us to developing best-in-class projects, really Class A in the main and main locations. And so as a result of that, we tend to see more cash buyers, more core fund style buyers coming in to buy these things that are less dependent on leverage than would be if we were going and rehabbing an older, smaller building that was not necessarily Class A, that someone would need leverage to buy from. So certainly rates are a factor, especially on our exit cap rates, but we've been fortunate enough to be in a position where we're developing best-in-class assets that benefit from an unleveraged buyer.
Warren Waxberger, CEO of AECOM Capital. Thank you for being with us, Warren. Really appreciate it.
Thanks for your time. I appreciate you.
Still ahead.
New high of the day there on SPY, up 1.37%.
Discretionary stocks, inflation, consumer fatigue. The holidays are upon us. What do we need to know? Coming up.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom.
I have to hold these things.
At the end of the day, my mom
Yeah. Whoa. Yeah, it's right above VWAP. That is neat. She's hungry. I think she's maybe sick. Probably got that China cough.
So I think the biggest, most interesting thing that we're seeing is that consumers are still paying up for
cough drop or
perceived
something.
value. So if there's a product that you are offering that is differentiated from what the other peers and competitive set have out there, the consumer is willing to selectively pay for that. The other piece that we're seeing really broadly from the
GNS
business
coming up
side of
above
things
VWAP.
is that, you know,
Down
supply
18%.
chain costs and logistics expenses and input costs are sort of easing. So, you know, that
nice
may
dip
at some
buy.
point pass through and help prices become
Hitting
a bit more
pretty big range up here, though.
consumers.
I thought it was interesting today. I
This is
just
the same
mentioned
thing
it a
that we
moment
had.
ago
Look at
about
this.
Best Buy talking about,
Right.
you know, the big lull that we've seen. Maybe
Yeah, it's
tech
the
will be
same
back
thing
and
happening
people
here.
will want that for the holiday. I mean, Greg,
Just
what say you?
dip,
What are you
stop
expecting
trigger,
for the holiday season now?
and then back up.
I think Jamie hit it pretty well in the sense
Yep, stop
consumers
trigger,
are
coming
looking
back
for that
up. Maybe
point
do
of
a little inverse head and
differentiation.
shoulders
They're
again.
looking for that reason to buy. So we see strong consumers on the high end and even on the
She's
lower
a
end.
fickle
consumer,
one,
the
that
demand's
GNS.
still there, but they are being very selective. So you want to look at retailers and brands that are
Popping up
able
a
to
bit.
provide that bespoke experience for consumers, and they'll eventually convert into sales.
Right, understood. And we think about the holidays and how the selective consumer will spend their dollars. You know, JOLTS came out today, Jamie, and we saw fewer job openings than was expected, and that could be a sign. There's been a lot of talk about recession looming and things like that. But we've seen a lot of revenge travel or people going to restaurants. You know, I was looking at things from, you know, traveling, hotels, how people are eating out. What about some of that behavior?
Uh-oh, Linux has
it's
a prediction.
fascinating. When we look at the four publicly traded
Linux,
cruise lines,
he's still
the
alive.
amount that they have in advance ticket sales
Still
through the second
trading.
quarter was something like 16 billion. If you look at that number pre-pandemic, I believe it was around 10 billion. So the
All right, we're gonna look
willingness
at the
to commit
Linux,
to
some
travel
Linux
more
DD,
than
TA.
you know necessarily 3
Maybe
months
inverse,
out
maybe not.
is there. People are willing to spend on that. And then, you know, I think when you look at retailers like Target or Walmart, names like that, And we look at it from, I cover the toy companies, the perspective of how their inventories are aligned. The COVID cycle really allowed these companies to step back and rationalize their inventory management, rationalize the distribution network, and think about how they want to be positioned to optimize both the pricing and profits. And so we don't necessarily feel like there's going to be the same sort of like rapid discounting, you know, in certain categories where there's already limited inventory. You know, I don't know that in crowded spaces like apparel, we have the same sort of feeling, but it sure seems like where retailers have taken a stance on inventory already, the pricing should hold up fairly well there.
Yeah, and then you have seasonality. I mean, there's consumer fatigue.
Let's see,
Maybe
it's
they were
the day after.
traveling
It's
during the
Thursday.
summer, everybody shopped a little bit. You have back to school, and then
right?
they take a little break, and then you have Thanksgiving and the holidays. You were also noting the different types of consumers. Those are more affluent and likely to spend on luxury names, right? Versus those who are really facing an inflationary environment, and it's hitting them hard, right?
The luxury names have really been able to hold up well, even with that inflationary pressure, but we are starting to see across the broad range of consumers that price value equation become more important. So retailers and brands are starting to realize that they have to evaluate that price to volume exchange because volumes are down. We've been able to see companies cover that up because they've been able to get the price in. As you go into the back part of the year, that equation is going to be a lot more dynamic.
Yeah, we talked about cruise lines a little bit. I mean, I think about Disney. You know, what about some of these extra things? I mean, you can say Vail resorts where people are skiing. There's a lot of those types of things.
Well, what's really exciting about those companies is they have the ability to put that dynamic pricing in. So you can see Disney continuing to ratchet up the experience price and the cost and the value that they give consumers, and that gives them the ability to price dynamically and ultimately figure out where that sweet spot is. The companies that have static pricing are going to be in a lot harder spot to do something with.
Right, and quickly, Jamie, just on services, I mean, you see that's been a hot spot, inflationary-wise. Final quick thought, Jamie?
Yeah, I mean, I think we're going to see inflation ease. Our economist last night or this morning put out some new data looking at inflation growing sub 2% in 2024 through 2027, GDP growth stabilizing a little bit thereafter between 2.5% and 3%. And a lot of that has to do with rates, our expectation for rates to ease in early 2024. So I think the Federal Reserve will probably move maybe a little bit faster than historically, you know, according to our internal outlook, and that should at least help bolster consumer spending to some degree.
All right, Jamie Katz and Greg Portell, thank you both for being here. Appreciate it. And thank you, friends, for joining me here on the Watch List. I'm Nicole Petalides every single day, 11 a.m. and 2 p.m. Keep it right here. Oliver Rennick, Market on Close, next.
I like it. I mean, I agree with Linux here. Just we have to find support at 15. If we do, then yeah. You can see it's moving back up to 30. I mean, it doesn't take a very good TA person to see what's been going on here. This being the support and this being resistance. Maybe not 30, I don't know, maybe 27. Five minutes to power hour. Alright, here we go. Here's the Linux post. On all this, how do I get rid of that? Get rid of it. Alright, GME bottom in 4 days, then up. I don't like to try and time the bot, like say, oh, at this day or this day. Just look at the chart and let it happen. There's no reason to put a date on it. You can put a price. You're like, say you think it's about that price. If he's saying after earnings, yeah, I might get a little sell off on earnings. Right, because, or no, is he saying right on earnings? Wait a minute. That is right on earnings, isn't it? posted yesterday. Oh, it's the day before earnings. A couple days before earnings. Why does it look like it's on the day of earnings? So he thinks it's going to rip on earnings. That's the thing, yeah. It's just, does it happen in the extended hours from earnings? That's where it's like, you're not playing TA, you're playing earnings. Hi all, this is it. Take good note of the events about to occur in the accumulation of 3 years worth of research. We don't know what any of this is. I finally get to show you this thing. Watch closely at the events about to follow and how madly accurate they are. Unless y'all short this into oblivion again. Today, tomorrow, Ryan Cohen will tweet something. I kind of agree with this sentiment too. I think we're due for a Ryan Cohen tweet. He likes to tweet near bottoms. We have earnings coming up. I can see this happening. I guess it's going to be something like hello or something about China, but we'll see a tweet. The bottom will be established around this Friday, Monday at most. So that's saying before earnings. Right, because earnings is the 6th. Yeah, next Wednesday. And yeah, this would also go along with the SPY being volatile and maybe coming down for PCE. And since we had this huge rip today, SPY will probably have a pretty big correction tomorrow. On you. What we got here? Christopher, thank you for joining, man. Thanks for becoming part of the Happy Money crew. Appreciate it, man. I think you're on our Discord. Send me a DM if you're on Discord. I'll give you the Happy Crew role. So the bottom of the status is Friday, Monday at most. There's not a lot of time left for the price to drop, so if any price drops start to happen, they have to happen quick. Next week, Tuesday onwards, 5th of September, so the day before earnings. So I guess he's getting exposure for earnings. Because last time we were doing a cycle, it happened. This move up on GME, we were predicting this right here. It was pretty straightforward. If we hit 15, it bounces. We're gonna get a move back up to resistance. The only thing that happened was it happened after hours, so it sucked unless you were holding shares or had exposure already. We didn't grind up, so it was kind of a squandered rally. And then it just sold off from there. Now, if it happens again, yeah, I don't know if I'm gonna have exposure. I don't think I'm necessarily gonna have calls for earnings. But anyways, yeah, power hour. Let's see, SPY still dancing around. Next week, toward onwards, 5 September. GME has to begin. Moon ends around 13th of September. So GME has historically liked to run towards the end of months, beginning of months. We used to think it was because of OPEX, and maybe it was. This wouldn't be because we're far past T+2 from OPEX. Something with rolling over maybe at the end of the month. Ends around the 13th, which would be what, SLD period, right when that starts. That would mean during this time SPY might be ripping up to all-time highs, making a big double top. Very possible. Next week, Moon ends around the 13th of September, and the usual multi-month decline begins due to everyone selling cover calls into a run again. Top Ace giving me last 2 times how to step up. Nice, appreciate it, Christopher. Yeah, I figured you're on Discord. Just send me a message and I'll give you the Happy Crew roll. Everyone's selling cover calls again. In short, today, tomorrow, Ryan Cohen CEO tweets about something, so it better be today because this was posted yesterday. GME calling the day. September 1 is the bottom on Friday. September 4, slow up trend begins. That's still before earnings. He just like totally negates earnings. September 5, 6, big uptrend begins. Uptrend begins, big uptrend begins. So September 6th is earnings. Then uptrend tops out 5/12. It's all very specific. I I wonder if he's trying to inverse this. He's totally setting himself up. I suggest following, reading the daily updates on this since this is a critical period. We're about to run soon, but should dump a little more just before it happens. Yeah, potentially a double bottom. Maybe even a lower low here and hitting that 15 and with an RSI divergence. I can see that playing out too. Where we hit that 15, RSI is a little higher. That's where I'd go long. Hopefully it's after earnings, so I don't have to hold through earnings. What absolutely baffles me about this is the timing of these events and my theory about how my posts are in a way causing these reactions. Oh, he said it'll go down. Better make it go up then. Oh, he said it'll go up. Better make it go down then. Since my data acts as a leading indicator, we have no idea what data he's talking about. I will always have a heads up of what is going to happen and enough time to react to changes like the ones above. Again, I truly think the only one out there causing these effects are the hordes of retail investors selling cover calls and closing them off at around the same netting times. I think in all of this, I act as the he said the thing, let's react, thus causing the set effect. We're going to find out how true this is with this run. I'm 100% sure that we're going to run according to this chart. I'm guessing it's just... Oh, this is actually a different chart. I thought it was just a link to that chart. What is this? Haven't seen this before. Bat signal? GME bat signal? What the heck? GME high price? Bat signal? This is just a chart he's made. We don't know where he gets any of this data from. So is the orange is the share price? Yeah, that's the share price. And the blue is the bat signal. The trends of GME bat signal and GME high price for date day. Color shows details about GME bat signal and GME high price. The data is filtered on symbol, which keeps 33 members. The view is filtered on date day, ranges from October 8th to August 28th. So when the bat signal and the price are both low, it runs. Is that what I'm seeing here? Or when the bat signal is below the price, it rallies? I don't know. Okay. Anyways, if somehow the data breaks down again like it did on my last prediction, I'll believe that I'm the cause of these effects. But the data... Spy still hanging out. But the data looks extremely strong. Too strong to be wrong, which is why I'm 100% convinced of a run within the time frame I mentioned. Well, that's easy. Yes, there will be a run within the time you mentioned. I'm sure at some point, the next 3 weeks, there'll be a run. Now you have to define a run. Otherwise, we'll be right no matter what. Last time I was able to time this perfectly down to the day in March using this new method. Different than all the other failed methods over the last 2 years. Oh, that's interesting. This will be the second perfect prediction for GME. Down to the day in March. March 15th. But this was earnings also. What the heck? Runs. I guess he had exposure through earnings. Yeah, I mean, maybe if they have an acquisition or something that they announce, that could cause a huge gap up on GME. This will be the second perfect prediction for GME. I'm posting about this on TradingView so that people can see these events happen and play out live perfectly as I've posted about them. My hopes are that if anyone does follow and play this prediction, will have made money, which is the whole point of trading, anything including in this stock. I'm a proponent of making money, not memeing on an internet forum for 2 to 3 years. I really hope 8+ hours per day worth of research for the past 2 years in my mid-30s has proven fruitful for something. I'm not even hopeful. I know it's fruitful, and I just can't wait for y'all to see this too. One more event I forgot to mention, which is still speculative in this chain of events, is that you meant to say Hindenburg? Hindenburg may announce a new fraud company to short suddenly around the 5th of September, like they did with Square and Adani. Why is he speculating Hindenburg may announce a new fraud company to short suddenly around the 5th? If they do, Hindenburg is short GameStop. Even if they announce it from someone else. If they announce it for anybody, they're short GameStop. What the heck? 2 of 365 ain't bad. That ain't bad. Is that when they announce their short reports or something on the 5th of September? A day before their earnings too? A bit too early for a moon. I have faith in a horde of cover call sellers to sell this little peak off. I got a few more long puts. There has to be a little correction by Friday before it just goes up. You just got weekly puts? See, bro, here's to hoping for some big tennies in our near future. There you have it, there's Linux. I can't believe SPY's still holding up. That's another humbling day. Be too quick to call a reversal. Barbecue 3.5. On 2 million more buyback. Could last till December. What do you mean could last until December? One provides update on stock buyback program with additional repurchase of 2 million shares of common stock. Buyback program start on August 16th. It can continue through December. Well, how much can they buy back? And why are they buying back stock again? They're not even reporting earnings? Or no, they're pre-revenue, never mind. I just... Mullen just seems like fraud to me. Now I'm in some sketchy stuff. GNS is up 25%. 25 million. Bought back from their 2 million. They're just showing their ability to time the bottoms or something. Yeah, I wasn't convinced this was the bottom either. I agree with Linux on that also. It'd be great if we could see 15 in RSI divergence, but I don't know if we'll be so fortunate. The next bottom, maybe it'll come with earnings. Maybe we won't have much reaction on earnings. That'd be ideal. All the premium just gets pushed out and we just find support around 15. And you get calls. Like with barbecue money. I'd like to see a little rally on barbecue. I feel like it could happen anytime. Seemed like today was starting to set it up. A little push into close. Why is not wavering at all? This is crazy. Yeah, it's just a steady day. Steady as she goes. Move's not going to happen until the end of the day, if at all.
Question as an economist to figure out, okay, how does this work, is whether that spending that is happening in the AI space, is it coming out of some other budget,
Good
or
thing
is it
you did,
addition
busy,
to what otherwise
busy
is happening on
bee.
the budget? And that's is a big question mark, and probably is
Yeah, I
going to
think we'll
determine
get.
whether this AI
We have data coming out
boost
tomorrow that could
you
move it
see
for
in
sure.
certain sectors actually is an overall
A
economic
couple.
boost.
Yeah, all of it's pretty
I
much
love
pre-market
this, and,
at 8:30.
I
So
trust your analysis. You're not a hype guy. You're not
yeah,
big
we'll get
on,
back
you
probably
know,
most of these gains tomorrow.
You were doing
At
all
least
the
back to the
sleuthing
breakout
for
here.
COVID numbers
Wasn't
and
tested
stuff,
at all.
giving us the raw data when we needed that, and you know, when there's so much hype in a sector like this, to get
Sucks for
your take,
dailies.
I think is refreshing. I mean, look, almost a point, almost a percent of GDP.
Even for calls, your calls are just melting value.
That's non-negligible. How do we forecast beyond that to know what that becomes? I mean, 1%, if we hit like the Atlanta Fed 5.8, is less of a deal than if we're stuck at this quarter's 2.5.
Yeah, well, obviously, so there's been a lot of focus in the last couple of months on some specific data that is pointing to much, much higher GDP growth in the current quarter, right? And clearly, we can have a single quarter where it annualizes to 4 or 5%. I don't think that has much to do with what the underlying trend is, right? So I think it's important to take a step back and think about where the economy is. And we're at this very kind of interesting point where the Fed has hiked rates really much more than almost anybody thought a year ago, right? And nevertheless, we have the economy kind of hanging in there, not showing any signs of acute stress, maybe with today's data being an exception, right? So we have this kind of tension between the Fed has done a lot, but we haven't really seen interest rate sensitive sectors and interest rate sensitive parts of the economy doing terribly. And I think that mostly has to do with there's just a long lag, right? A lot of people have a 30-year mortgage, right? They cannot see the high interest rate in their mortgage payments. A lot of companies have termed out their debt and have, rolled short-term debt into 5-year, 10-year debt. And it now takes a long time before that debt rolls into higher rates. So it's not that the economy is not impacted by, interest rates at the Fed level being more than 5%, but it just takes a long time to feed through. So think, even if the Fed was on hold here, we're going to see those effects of the past tightening come into the equation more and more in coming quarters. And I think the labor market data we had today is a very good first example. Last week, we had a good, another example from the ISM data that also was viewed as a kind of warning sign about where growth is heading. And I think the most interesting thing in relation to the bond market that you talked about a lot in the introduction is that it seems to me that what really drives the bond market here is actually the growth news, right? Negative growth news has a big impact. Positive growth news has a big impact. And it's that growth trend that is actually turning out to be more important than the CPI numbers. The CPI numbers we've had over the last couple of months have showed a big turn. That wasn't sufficient to really change the tune in the bond market and the yield curve, but the growth numbers might be. So I think that's where investors should be hyper focused. Like, are we heading towards below trend growth or not? And I think gradually we will be.
So to connect this to the NVIDIA point, it really brings up an important question that I find a lot of growth bulls have a little bit of a conflict in their thesis, because they say buy NVIDIA, buy Tesla, buy all these AI names, but it's not just for the earnings growth. It's because valuations will also stay elevated because the economy will slow and the Fed will have to cut. So where does the impact of the growth potential on the economy of these AI disruptors have on the trajectory of those kind of lagged effects? Because I have a little trouble with the theory that, okay, I want to buy a stock like NVIDIA because it's going to have all this disruptive technology that's going to change the world, but then also the GDP is going to come down and Fed's going to have to cut because we're in recession. Like, I have trouble marrying those, but I guess could you argue that it's possible?
So I think if we sort of look at this cycle globally, right, we've had a situation where the US was early coming out of the COVID lockdown, early delivering vaccines, early on reopening. And that meant that the US cycle was kind of leading. And now the reason why the US cycle has surprised so many people is that it has not really turned before the other economies in the world. In the last couple of months, we've had a clear turn in the European data, and it was really supposed to be the other way. It was supposed to be the US that came into the cycle earlier and turned earlier. And I think the AI, which is much more concentrated in the US than any other economy, has lengthened the US cycle, right? Because if we have that boost that I'm talking about, like maybe 0.5%, maybe a full percentage points of boost to GDP, it's just lengthened this cycle, meant that we couldn't see at the headline level the drag from the interest rate hikes. So I think that's very important. The Fed has a very challenging situation on their hands, right? It is a totally different cycle than any of the previous tightening/easing cycles we've had, in that it used to be always the case that inflation was really never a material issue, right? So as soon as growth really turned over, the Fed could get ready to ease, right? And that's not a luxury the Fed has in this cycle, right? Because inflation is so much above target that even if we do have pronounced growth weakness in the coming quarters, it's not obvious that the Fed will be able to relax quickly, right? And I think look at what's going on in the yield curve.
I mean, I guess
We've
almost at 450, but 449.
Situations where the market priced, 150 basis points of easing next year. We have less than that price now, right?
Pushing it back.
We've been going back, let's call it 115 or something we have now. So we have this persistent expectation that as soon as growth flips, the Fed will be able to step in. And I think that's a real question mark if they can do that. And the follow on to that is that once growth turns, if the Fed is not cutting aggressively, clearly there's going to be risk assets, growth assets that are going to be under pressure from the Fed not delivering as quickly as currently is expected.
All right, Jens, really good stuff, and a timely conversation, making that connection about the extra boost that we're getting from the AI productivity. I know that there is another conversation within the subject of productivity and wages, and the role AI is going to play. We'll have to have that one next time. Great stuff, and appreciate the commentary as always. Thanks for being here, Jens.
Thank you very much.
Mr. Norvig's founder and CEO, Exanta Data and Market Reader. All right, we talked a lot of tech. Let's come back and talk some travel. There's another argument that the big lift in GDP has come from folks traveling around the world to catch Beyonce and Taylor Swift and revenge travel. And the airlines have still been trending upwards. Tony Zhang's betting that that will resume. Be right back.
Get that daily candle. Dude, those calls I opened up this morning. I held him? Wow, new high there on SPY. 1.4. I had a chance to exit actually. This wick right here. RSI divergence. We're still in the channel. Still in the upward channel though. Huh. Okay. Just sucks when you have a good day and then it just flips to bad. Pretty well. And breaking your rules.
Concern, if you will. And I think it's interesting that you said in your previous segment that NVIDIA and AI potentially contributed to a few percentage basis points of GDP. You know, Taylor Swift probably has a pretty notable mention here in terms of potentially adding a few basis points to GDP this particular year, as well as people travel across the country, across the world to attend her concerts. And you know, when you look at airline pricing, we certainly have seen pricing come a little bit softer here in the last couple of months, which reflects kind of what has been a sheer amount of demand coming out of the pandemic, starting to normalize a little bit. But right now we still see volumes quite strong in terms of booking volumes. Just pricing has come down a little bit, but I think the ETF has pulled back a little too far for the current fundamentals. And if you look at a chart here for the JETS ETF, we broke out here above that $18 resistance level somewhere around June. It rallied all the way up to that roughly 22.5 level and now has pulled all the way back to that $18 support level. And that's really where I saw the opportunity to get long the JETS ETF. And today's price action, granted the whole market is up, simply has confirmed that $18 support level is holding. But again, like I said, you know, the pullback that we've seen is largely due to softening pricing that had some investors perhaps concerned about the profitability of airlines. But keep in mind, this is some of the most, we've seen record profits from airlines the last quarter. I think that as we come up to earnings season again in a little over a month, we're going to likely see that reiterate again from the major airlines. We have China reopening, and we've seen flight schedules reopen up between US and China in October and November from most of the major airlines. So we expect that piece to also recover quite nicely. We see travel out of China in terms of airline seats per miles also looking quite strong.
15,
so overall, the airline industry right now looking quite strong.
But what
the
have you
concerns
done?
out of China in terms of contagion, I think, are a little overblown in terms of the expressions in the ETF. And then you have fuel pricing that is also moderated a little bit from those recent highs. So I think all of this is contributing to some recent strength here in the JETS ETF, and I think that over the next few weeks you're going to likely see a bit of a further recovery here.
All right, case well made. I think it's a pretty compelling. I mean, given that we haven't seen any major drop-off in any of the travel numbers, but the stocks are so volatile still. So if you pick it up at 19 bucks and change, where it's at right now, you're also pretty much buying right in trend, to your point, after this pullback. And that's the strike you want, basically where we're trading 19.
Coinbase up 15.
Yeah, that's exactly
Got
right.
30 minutes to close.
You know, right now the implied volatility on the Jets ETF, despite the pullback, is actually quite inexpensive. So this is an opportunity, in my opinion, because the upside is still fairly large. The risk to reward ratio is quite strong in terms of favor to the long side. I think the best way to structure this from an options perspective is to simply buy a call option. Normally, when this types of scenarios, I'd look at selling put spreads because implied volatilities are usually expensive after such a large pullback or a quick move here to the downside. We're not seeing that. Calls are extremely cheap. So I would do a very simple going out to the October monthly expiration, which gives me a little over a month and a half worth of time, buying that $19 strike. Earlier today, you can pay a little under $1 right now. That's priced just around $1 right now in terms of buying those $19 strike calls. And this gives you a break-even price of roughly 20 bucks. So if the stock if the ETF moves just a couple of percentages higher, you'll break even. Anything above that is profit at expiration. So the risk to reward, in my opinion, currently favors heavily to the long side at the moment. And if the ETF breaks below that $18 support level, that would be your indication that this trade thesis is not playing out, and I would cut my losses if it breaks back below that $18 support level.
All right, like the plan of action too. Always appreciate that in addition to the actual trade, the strategy as well, and knowing when to cut your losses. All right, the case made for the bullish airline play. You know, we'll keep tabs on it. Thank you very much, Tony.
Thank you so much.
You got it, Tony Zing. Options play. The 19 strike in the JETS Jets ETF. Now, on the flip side, Tom spotted a bearish trade in American. But two bullish trades
Been fast down 40%
today, and all of it's up anyway. But of course, the strength is really in those companies more geared towards growth this afternoon. Palantir, Coinbase,
HE down, Ryan down 4%. Back to VWAP.
worst balance sheet out of all of them. So, that's always been a concern for them. They did raise their some of their guidance moving forward, even though they did just settle their pilot dispute, 15,000 of their pilots, 21% pay raise combined with contributions to their 401k. I mean, unions are on fire right now. They're winning the battles across the board. But that gives a little bit of clarity to the company moving forward because demand's still there. TSA numbers right now are above 2019 levels, so that's a bonus for them, even though they haven't increased capacity as much as maybe you or I would like because flight
prices aren't dropping much for us.
They're ridiculous. But that being said, somebody may be taking advantage of the thought that we're going to see some more weakness in this space. Remember, if the consumer gets handcuffed here at any point, Oliver, maybe that wage growth slows even more. Job openings were lower than expected. Things start tightening up. Consumer's the first one that's going to pull back their spending. So maybe that's traders banking on that. But they were out in the October monthly series here. And they bought a put spread. So they offset some of their costs on this bearish play by selling a put against a bearish put that they bought. They bought the October 15 strike put 15,000 times, and then they sold 15,000 of the 13 strike put. So only a $2 wide put vertical to the downside here. They paid a debit of 60 cents, so really inexpensive. If this thing goes below 13 over the next 52 days, that thing can expand to $2, right? It's a pretty good risk-reward scenario. This trader's not looking for a massive slide back down to 12, 10, $9 or anything like that. They just think that maybe over the next nearly 2 months that we're going to see some more weakness in the airlines. The break even, $14.40. That's about 3% below the current share price in there. So you don't need a massive move to the downside. Or it could be somebody hedging an existing long stock position also. You got to take these into consideration when you're looking at some of the unusual option flows. But 15,000 lot put spread, pretty big.
Yeah, they just need one 50-cent drop, and they're in the clear.
Yeah.
We're at $14.90 even right now.
Yeah.
All right, let's talk about your bullish trades. Palantir and Coinbase. Let's go Palantir first, as earnings are behind the company, and it's hanging on after a drop from 20 bucks down to 15. But today's bounce definitely helps maintain the range they've been in around this report.
Yeah, and the report was basically in line. Some positive momentum in the U.S. commercial business. That's what they probably need to expand a little bit. They've got those government contracts here, but they mentioned AI in their conference call repeatedly, and that's why the stock's up 138% so far this year. Up another 4% today. But so this is getting thrown into that mix. Their new platform that they have, think about all these companies that are trying to get into AI. How do you do it, right? Well, they have a platform for companies to get involved in where they show them how they can, basically streamline their businesses, use AI to help efficiencies across the board. So I think the guidance here, that's why you're seeing the move in the stock, not only because it's AI, but the platform that they've developed here. It's called Artificial Intelligence Platform. AIP is what they're selling to consumers at this point. A lot of bullish momentum in this name this year and in the option market today with the stock up over 4%. Trader bought 25,000 really short-term options, the September 1st weekly series. So only 3 days till expiration. The 16 strike call, they paid a debit of 16 for on average debit of 16 cents on those. So the break even for this trader or these traders, it's probably multiple because we didn't see any big, huge like 5,000 lots on this.
Okay.
The 25,000 lot is made up of small increments across the board. But that break even of 16.16 over the next 3 days, that's only about 5.5% above the current share price, but it's really short-term positioning. And if this rally continues into the end of August, I could easily see the Palantir, which can move 5, 10, 15% in a day, get above that break even.
All right. So once again here, they're looking for, a fairly muted move at minimum. 16 break even, not too far off from here after today's rally.
Right.
Kind of similar to the American trade. They start making money just 50 cents off. This trade starts making money a little more than a buck away from here. All right, let's talk Coinbase. Let's do it.
Yeah.
Up 15%.
Yep.
And you know, to me, it's like, on the one hand, it's totally not new that crypto does irrational stuff. But like this one in particular is like, you have a business and then you have new competition that is like obviously going to eat away at their, you know, market share of how people invest and trade this stuff. But they're up.
Yeah,
like,
I mean,
it seems so obviously a negative catalyst for them.
I think I think a lot of traders, investors, when you hear this news about the grayscale,
traders, investors, crypto
order,
people just go berserk. It's like whenever there's anything positive, it doesn't matter. You got Solana up today. You got Pig Coin up. You got Poop Coin up.
Riot up. Marathon,
yeah, all of them.
Yep. And think about this: one word, legitimacy. And that's what I think the industry wants as a whole, and that's why I think traders and investors are getting in on this. There was a note out of Mizuho, Dan DeLev, that's on the network once in a while, talking about this.
Coinbase.
Oh yeah, he goes, this is actually opening up more competition for Coinbase. So how is this going to improve what they do?
It seems like super obvious, not good for Coinbase, but I mean, it's not like horrible for them. You know, it's not like there's another exchange opening up, but if the idea is that people are going to be brought in to the crypto world from this easy, cheap vehicle of an ETF, then that is a major potential risk to those flows making their way into Coinbase trading. So, all right, but somebody's bullish, obviously. What'd you see?
Yeah, in the September 1st weekly, so a lot of positioning short term in this name on the big pop today. The 85 strike call, they bought over 15,000 of those earlier today. Average debit of about 250. And this was in small increments across the board, not one big 15,000 lot. So if they paid 250, the break even for these traders, 87.50 over the next 3 days. That's only about 3% above the current share price in there. Call volume 5 times normal daily average volume. Over 200,000 calls have traded on the day. So when you see a stock like this, especially Coinbase, anything connected with Bitcoin, you're going to see massive volume flows, and no different today. 5 times normal daily average volume that we've seen over the last week of trading. So yeah, positioning into the end of the week that, hey, this Bitcoin rally of 7.5% is going to continue, and the Coinbase rally is going to continue. 15% is a pretty major move for this this name. By the way, Mizuho's Dan DeLev he reiterated his $27 price target and underperform rating.
Yeah, wow. All right. He is definitely king of the bears.
Yeah. Option traders are going against him
right now.
Yeah.
Well, look, I mean, even after today's bounce, obviously, zoom out in the long-term chart of Coinbase, and it's been brutal, but it's been very sideways, you know, for almost, more than a year now, essentially.
I mean, stock's up 140% this year.
Right.
Yeah.
And, down, what, 350
and that's
divided by 420, whatever that percent is.
And that's with Bitcoin flatlined below 30K per month. So, yeah, it's pretty shocking that stock's up that much.
All right. Thanks, Tom, for the trades. When we come back, more tech and more fresh developments from the giants. Apple's got the event coming up, and here's what's fun is they're going to start using Android chargers. Ha ha! Take that, Apple users.
$16,000. Yeah, I bought back into barbecue. A little pop on it a couple days ago. This day? No, I think it was this day. Bought back in. So I think it's looking good still. It's at least flattening out. Beginning of a reversal. Consolidating up here. 20 minutes to close. Thoughts on Rad? Oh boy. Just sit on your money. Sit on the rest of your money. You already invested it way too quick. I mean, it might bounce. News coming out. It could be a bounce play, but I don't know. I would get maybe some call lottos. Lots of time. Close to the money. About to make a new high, maybe. Maybe climbing up to VWAP. Yeah, barbecue's flagging for sure. It's just consolidating down there. But again, it could bounce after a big sell-off like that. Kind of crazy. It actually hasn't. Well, not really, I guess. How low games do you go? Yeah, I could definitely go to 0. Maybe starting to flatten out here. The most volume it's had. They've got to be diluting, right? And selling. I mean, Adam Aaron selling the rest that he can. New high of the day on SPY. 15 minutes to go. Chunk is up. Yeah, it's a big day. Big day in the market. I bet it's up. Yeah, 2.5% on Apple. That's crazy. Tesla's up 7.5%. Oh my gosh. I mean, look at Tesla. I would probably, I mean, I would sit on it. But honestly, the GME play could be a nice setup after earnings. If we're bounced around support after earnings, I would probably get calls on it around the 15.5. That lines up with the market probably reaching back up to all-time high, which after a day like today seems pretty easy for it. Look at this. Look at this move. Negative pricing. I would honestly sell out of those. Tesla and Apple. And sit on your cash. At least for a month. Slowly put it back in. Give yourself like $1,000 a month to invest. I'll spread it out over what, 23 months. And then, or 18,000, maybe 18 months, and the rest you can trade with. $15 minutes. Why? Why? MC is now negative 1%. I had nothing to do with VWAP today. Look at that. Ran away from it as soon as possible. Had one test on it 30 minutes after we opened, and has had nothing to do with it ever since. What's VWAP? We'll get it in the last 10 minutes. After all the prems have deteriorated. Three minutes to 10 minutes of Fugazi. Yeah, I mean, they might continue to rally. Like, the market could be making new highs, so these might have a bit of a push. But I'm assuming your plan when you bought in was to hold for 5 years at least. So, yeah. Now you're talking about a trade. So yeah, I mean, I guess if we were just looking to trade it on this short term, yeah, they look bullish to both fill those gaps. other divergence. One final divergence. Since what, 11:45? I mean, it's been in an upward channel, but basically just algo chop all the way up for 5 hours almost, 4 something hours.
Lowest level since January of 2018. What does that mean? That means that holders of Bitcoin, they're taking them off the exchanges and they're putting them in, self-custody, their wallets, whatever it may be. That typically has been a very bullish signal. So we'll see if, the two of those things kind of happening together, if that is really what the bulls are looking for here. But again, I'm not buying in just quite yet.
So the hodlers are hodling even harder.
They are. That's exactly what they're doing.
Everything else up across the board, ETH, Coin, Marathon, etc. A bunch of the other altcoins and stuff. Also, kind of makes me think about the macro implications too. Market kind of going through this trade today, reversing the bond move down. It also kind of seems like if we're not getting any more hikes, that's music to the coiners' ears too, I would assume.
There's no question it's a risk off.
No more hikes? What the heck?
What Bitcoin have done today without this move?
Is that the sentiment now?
It would have been positive along with the rest of the market and the rest of risk off assets. But this kind of move was very unexpected. But you've got a lot all of a sudden, all at once here in the positive and the bullish camp for Bitcoin. I've got to see that prove out and hold before I can be a buyer.
All right. Thanks for the thoughts, Scott. Good timing. Nice convo here. Definitely a very interesting day. Big single day move. Zoom out on the chart. Still got some work to do. When we come back, it's our Charles Schwab big picture panel to take us into the bell. And boy, has the picture gotten much more colorful here today.
Ten minutes Fugazi. Holding and hoping. Lost again. GME above VWAP. Barbecue, nice little bounce back up. 4.5%. Starting to make some higher lows. SPY consolidating up here. Getting ready for 5-finger slap.
seen a bit of a move down in terms of probabilities for a hike at the November meeting. But to your point, Oliver, we've got Jobs Day on Friday, and that could change the picture.
Yeah, it really seems like we're settling into this coin flip scenario for what comes next for the Fed. Is that
Small lotto on
a
red?
unique spot to be? I mean, in some ways, Colin, it feels like the coin flip might be a very boring outlook.
GNS
but
on 2 accounts.
I'd argue it might be the exact
This
opposite,
is the way.
because it means like every piece of data could change us meaningfully into one side of probability.
That's how the markets have been responding over the past year. I mean, it seems like every day we're really paying so much attention to each release as if that one release is going to drive the decision making or decisions by the Fed. JOLTS today is really just one piece of the puzzle. Certainly good news in that it showed slight loosening of the labor market. Now, I say good news. It's not like we want to see too much loosening. It's not like we're looking for job losses. But it's good news for the
Thanks,
outlook
Kitty Daddy.
for the
Appreciate the
Fed,
support, man.
because Powell at his Jackson Hole speech specifically called out, the better than expected economy we've seen lately in terms of growth, consumption,
Powell was
things
so
like that, but
hawkish
also
at
the tightness of the
Jackson
labor market.
Hole. I don't
He
know
cautions that if they
what-
remain strong,
how
if the labor market
people
doesn't really loosen
aren't
much, then maybe
perceiving it that
additional
way.
tightening could be warranted. So this was a step in the right direction that it shows the labor market is loosening a little bit. As Lizanne mentioned, probabilities of a rate hike have come down a little bit, but I think it's still too early. Again, this is one piece. I think Friday's report will likely be a lot more important to see what's actually happening on the hiring process. And we can't forget about Thursday with PCE. I mean, that's half of the Fed's mandate.
On-farm payrolls?
And the Fed wants to make sure that that disinflationary trend is
Yeah,
continuing.
I suppose.
Yeah, what
As far as
about
jobs go.
the description for this number? To come back to that point about the JOLTS dropping, being bad
4,000 red
or
shares?
good, I'm hearing some of the argument from the Twitterverse and the usual places, Lizanne, that this could very well be kind of the Goldilocks situation again, where instead of firing, there's just not as much hiring, and that's kind of the best of both worlds. What do you make of that argument?
Well, maybe, but I think perpetual Goldilocks maybe is too Goldilocks a scenario. We have to keep in mind what has happened this year with regard to the jobs data that we get every fourth Friday. And not only has every month this year been revised down to, on average, I think it's 46,000. We just got the benchmark revisions that cover the period, the 1 year period through March of this year. And that shows
Spies crowned
306,000 less
for
jobs.
the day with a head and shoulders.
358,000 less jobs if you just look at the private sector.
But
You
it
add
will
into the mix
remain
the shrinkage in
king
hour
of the day.
worked, the big surge in
Up
multiple job
1.4%.
holders, which can sometimes
3
mean
minutes to
double
bell.
counting in payrolls.
Now, there's your channel on Rad. On the channel. I don't know, GNS looks like kind of how it did back here, but I don't like this RSI divergence on GNS. It's not bullish to me at all. The daily RSI divergences are, I've found, more consistent, as you can see with this 5 minute. Given nothing else was going with this, RSI was just following along with the SPY. Didn't really care. 2 minutes to close. Fun day. Full of action. Huge risk on pops everywhere. All over the place. GNS coming down there into close. Below VWAP. Yeah, I mean, you don't want to just use one indicator. That was part of my problem. So, down 20% on the small account. 20% on the day. That's what happens when you try and time the tops and bottoms. Not always. Sometimes you can do it. But that's why I try not to do that. Not only timing the tops and bottoms, as well as not cutting losses, having a plan to cut losses. It's weird. I feel like I'm better than that. I am, but I just was stubborn today. Had a good morning, traded right, did well. Even grabbed calls here for this. Closed him here though, because yeah. But solid continuation day today, because yesterday was a chop. And buys closing near the highs today. Well done. That's kind of selling off into close. It closed? Yeah, my clock, like everything's a little slow. That's so annoying. Why? Like 3 seconds slow. That doesn't seem right. Like everything, I mean, being a trader, I feel like I need to have it on time. Exactly on time. Yes, Biomac did flip red to green. It didn't matter though. It was just melting up all day. Yeah. Seen it before. Seen the divergence, and need to look at levels. I didn't wait for confirmation. I tried to time the top and then held it, didn't use a stop, and then actually averaged into it, thinking I'm gonna time the top again, and then it would have worked out for some reversal day. Honestly, just moved to VWAP and I would have been big green on the day, but literally had nothing. That's crazy. Closed at the high of the day. Yeah. So don't time the tops and bottoms, and set stop losses. It's okay to catch the move as it's going. Anyways, thanks guys. Appreciate it. Thanks for the support. We'll see you tomorrow. See you on Discord. Have a good afternoon.